Good evening, friends. Welcome to the next virtual coaching classes organized by Board of Studies ICAI. So, this evening we are going to discuss on paper 8 indirect taxes at final level, and topic for our today's discussion, levy and exemptions from customs duty. So, this particular topic, friends, I would put it this way. Always there is an adage saying that travel the road the less traveled, wherein this particular area of discussion on customs law and foreign trade policy. These are two areas. These are two areas where not much of people have focus or idea of this particular aspects. From corporate point of view, from professional career point of view, there is enormous value addition which you can think of giving to manufacturing companies, units which are operating under EOU, units which have been operating as a SEZ unit. Now, so do you really need to have a expertise knowledge in handling this particular area? I would say may not be that complicated as our income tax provisions. But take it from me, friends. This is one area, customs and foreign trade policy. Look from this particular chapters as a value added point of view from your career rather than looking from your academic interest. So as usual, I'll give my level best to take you through these provisions to make you understand practically where all we can give a value addition in our day-to-day practice when we give services to the companies per se. So today what we are going to understand, we'll start with our basic aspects of customs law. We will understand how this particular law has been evolved and what is there as of today stands in the Customs Act. And in the process, we will look into a couple of definitions which are very, very important from our customs point of view. Then we will have the basic understanding of what is a levy, what is a duty, or what is the applicability of tax under customs law. Now, when we read the customs law, is it important for us to keep a knowledge of any other law? For example, say GST. So how do we take the provisions from GST law when we talk about levy under customs law? And next we'll move on to something called assessment of duty. This is a mechanism where we quantify what is the amount of tax or duty which gets collected in the process of assessment. And then we have the hardcore discussion of today's topic on remission, abatement, exemptions. Now, this particular chapter on remission, abatement, exemptions, this is one particular topic which will have a value addition, not that it should be only in the practice of indirect taxation. If you happen to be a CFO, if you happen to be a consultant to a particular company, this is one particular chapter which gives an enormous scope for your value addition to organizations. So when we go through that particular provisions, we will have a detailed understanding what is therein for us to understand from the particular chapter. And as usual, at the end of all the discussion, we will sum up all learnings what we had from this particular chapter and how we move forward in our career. And before we start our today's discussion, let me recollect this great personality, the father of nation, so-called Bapuji, Mohandas Karamchand Gandhiji. I felt let us learn a couple of key aspects which I felt is important for us to take as a learning when we look at this particular great person. It is easy to stand in the crowd, but it takes courage to stand alone. So if you look at today's scenario, when you be part of a crowd and you have to make a noise, it doesn't make any sense to you. The same activity, if you tend to stand alone and you want to make the similar noise, one should have a real courage. Now, this particular phrase has a lot of immense meaning where the tagline of Satyameva Jayate comes into picture. And this is another adage from this great personality. To lose patience is to lose battle. Next 1 month, I would recommend all of you to keep this particular line in your back of memory very, very strong. We have set a goal, we have set a mission, and we have started our practice for our main examination called CA. Everyone has got a dream to aspire as a professional chartered accountant. And I would recommend to never lose your hope, never lose your patience till you travel the last mile of the goal which you have set with. And finally, before we go further, be the change that you wish to see in the world. Friends, it is always easy for us to look at around surroundings and make a complaint. But it always requires a courage where you will be the first person who can be the practitioner of this change which you want to see in the world. So if you can start this particular change, what you have visualized at your doorstep, that becomes the future which you want to see. So with this three quotations, let us celebrate our great remembrance of Bapu, the father of nation, and his Jayanti. And let's start with our technical session of learning on customs law. So friends, as I have been thinking of this particular chapter on customs law, what I have felt is, let me bring a couple of practical examples. Let me give some of the live examples which has got a thought process. When we read through the provisions, these examples should be in a position to tinkle your thought process. What is that I have to learn? What is that I have to see in these provisions? With that backdrop, I have set few examples. I'm not going to say that these examples will be solved at the end of session. Rather, these examples will help us to understand what is that I have to look from my customs law and also foreign trade policy. This session, again, I would say, this particular chapter called customs law and foreign trade policy. If you look from examination point of view, there is 25% weightage. I would say there is bigger scope in terms of practice once we get qualified and come into our practice. The first example, friends, this is the example. Mrs. PPC Limited have imported goods from Japan during March 2020. Due to operational issues, goods were not cleared from customs station. Rather, the same have been kept in a warehouse. Rate of duty applicable during March 2020 is 12%. During June 20, the above goods were cleared for home consumption. At that point in time, the rate of duty is 18%. Examine the point in time when the duty has to be paid. So friends, here I have used two things which I would like to draw your attention to. One aspect called were not clear. One aspect called these goods were not clear. Now, when I say it were not clear, when I have imported the goods, it is not obligation that immediately you have to take the goods and bring it into your factory. I have an option called warehouse, means the goods which have come into the customs water, the Indian territorial soil, those goods, before I get cleared from the customs authority, I have a mechanism, I have a procedure where I store those goods, I keep those goods in a warehouse. When we go further, we will understand this particular term called warehouse. So what happened? The day, the month, when I have imported the goods, the rate of tax, the rate of duty happens to be 12%. Now, because of various reasons, maybe COVID pandemic or no orders from a customer end, or there was a request from the customer to hold the goods in the particular warehouse or wherever you want, and the customer placed the order somewhere in June. The point in time when I have planned to clear the goods, the duty happens to be 18%. Now here we need to understand from our customs point of view, what is the rate of duty I have to pay? Should I pay 12% or should I pay 18%? So when we read through the provisions, we are going to have a clarity to answer this particular scenario. Now, not only this, when we look from customs point of view, I would try to tinkle your thought process from working capital management point of view. So is there a way where I can store the goods in a particular place where I don't get it clear for my factory? Answer is definitely a yes. Sir, if I have a client who has a business model, who is working on a trading business model, where every order which he gets from a customer, back to back, he procures the metal from my supplier. So can he get into this particular business process? Answer is a big yes. where we need to read the provisions of customs law and we need to understand how this particular mechanism happens, where I get the goods imported, I keep the goods in a particular bonded warehouse, and from there, as and when I get the clearance from my customer saying that please make the goods available, make the goods delivery, then I can get those goods cleared to the customer's premises. This is a point where my bonding, the warehouse concept comes into picture. I need not have a bigger factory. I need not have a premises where I have to keep my inventory. Second thing, my customs duty. Instead of me paying the customs duty in the month of March, I can defer the payment of duty till June. This is what happens where your working capital management comes into picture. So friends, this is one particular arena where we can think of when we read the customs provisions. So this is my first example where I have set a couple of examples. And before we proceed further, there are two announcements which I would like to make. On the request of a couple of students, I have uploaded the Excel file which we have discussed in our previous session. The previous sessions which we have discussed on penal provisions, offences and penalties, the worksheet what we have practiced where I have solved the examples, the same particular worksheet has been uploaded on the Board of Studies website where you can download and you can go through the answers for those questions we have practiced. Second announcement. This presentation, what we're going to discuss today, along with an Excel workbook, I would recommend all of you to please download that workbook and keep in handy. Reason, we are going to discuss a couple of problems along with our customs provisions. So these are the two announcements, and now we will proceed further to understand what is there in store for us to understand from this customs point of view. A consignment worth 30 lakhs has reached Chennai port during January 2020. Mrs. ABC Limited is the assessee in whose name the A-way bill is prepared before it reaches customs port. So here there is a consignment which has come to Chennai and the value is 30 lakhs. ABC Limited is the person on whose name the goods have travelled. Assessee have noted that above goods have reached the Indian customs with a considerable delay beyond 3 months of scheduled date. Examine the obligation and responsibility if the above consignment is not cleared by the assessee. Now, friends, when you recollect, when you read your commercial laws, Contract Act, there is an expectation that this particular person called ABC Limited have placed an order from a particular supplier who's there outside. And this particular supplier has caused a considerable delay in terms of supplying the goods. Here, I would like to draw attention of your knowledge of costing, where we have a mechanism called JIT, just in time. If I happen to work in a just in time mechanism, where I do the delivery of goods to my customers called OEM customers. What is an OEM? Original Equipment Manufacturer. Assuming I have a particular manufacturing setup or I have a trading concern where I get my business contract tied up or signed with Honda or Maruti. This entity called Honda Maruti, every day on their portal, they raise the inventory schedule which needs to be delivered at their factory gate on a daily basis. Now, this is a contract where I have a promise for supply of goods from my supplier who has caused a considerable delay. Now, because of this contractual violation where I have executed the terms of contract, where I have liquidated, I have invoked the clause of my LD clause where I have encashed the contract violation and have terminated not to procure the goods. Now, this case, the goods have reached to customs port. I have received the money as a contract violation from my supplier. However, the goods have come and landed in my customs port. What if I'm not interested to take the delivery of these goods? Can the customs authority insist me to pay the duty and forego the ownership of those goods, or can they take the ownership suo moto without ABC involving in this particular transaction? So this is one particular mechanism we will try to understand from our customs provisions. Can the customs authority hold the company responsible for non-compliance, if any? Now, this is one aspect which I continue from our previous discussion on offences and penalties, where you have to keep in mind the in charge of the entity can that person also be held personally responsible? So friends, just keep in mind, these are the exposure when we have, when we deal with the compliances under any statute. So from this example, what are the responsibilities if a person wants to give up their right on goods which have landed up in customs waters or landed up at customs station, where I, being the buyer, would not be interested or not interested to take the possession of those goods. So this is also one example we will try to cover in our today's discussion. This example looks like a lengthy example, but it has got a lot of weightage for us to understand, especially from the taxation and planning perspective. Let's read the example. Mr. A has imported a consignment of steel scrap during November 2019, wherein government has prescribed the customs duty at the rate of 5% on such scrap instead of regular rate of 18%. Considering the competitive price and beneficial interest on such scrap sold in the domestic market, he placed an order for 2 consignments during December 2019. Government have identified lacuna in the exemption notification and have withdrawn such notification on the day about way these 2 consignments have reached the Indian territorial waters. Examine the right casted upon the assessee to challenge such act of central government. So this is one example set in the backdrop where the customs authority have brought in a notification by virtue of a tariff act where they have prescribed the rate of customs duty as 5%. In the regular course of business, any metals which have been sold in the local domestic market, the rate of tax is either at 28% or 18%. Let us assume for a moment the regular rate of tax is 18%. So me, instead of buying that particular scrap in the local market, if I import that scrap from abroad, foreign nation, I get a duty which needs to be paid at the rate of 5%. Now friends, look at the pricing mechanism which I am going to enjoy. The material which I am going to procure is going to suffer 5% rather than at 18%. 13% is a duty which I am going to save, and always when I import a material, why do I import? Scale of economy, where I get a better price when I import a container as a one go. Now if you see solar industry, I get a economies of scale when I import the steel tubes in a bulk. When I import a consignment, I get a price which is almost 50% to 60% compared to the local market. So this is a particular case where steel is one particular commodity which has got enormous demand as long as the earth survives. Now this particular transaction, when this gentleman has imported, he noted that customs notification has given the rate of duty is 5%. So hoping that he is going to get more profits, he has placed order for 2 more consignments, and when the consignment reached the Indian territorial waters, government has have come to know that there was a gap in this duty compared to the domestic market with the import commodity, and they have bridged the gap. They have increased the rate of duty from 5% to 18%. Now this particular gentleman, who happens to be an assessee, can he challenge that exemption notification, saying that, look, you have given a notification which is valid for a period of 30 days. On the day when I have imported, this notification has a validity. By virtue of a notification, abruptly before the 30 days of exemption notification, you have withdrawn the notification. Can I, being an assessee, challenge that particular notification? This is one particular example we will study in terms of our provisions. Then, example number D. This is one particular slide, very, very important, which I was talking in the beginning of the session, where you going to be a professional chartered accountant. Once you get into the practice, once you get into the corporate world, imagine you're going to render your services to a manufacturing company, and this is one particular slide which has got enormous exposure, what we are going to learn in customs law read with foreign trade policy. Mr. Y, a professional chartered accountant, has been appointed by a manufacturing entity towards examining their business operations and provide consultation on some of the business operations as below. Possibility to reduce working capital exposure on account of customs duty. Now, They say, sir, I have been importing my raw material. When I import my raw material, I am paying a customs duty at the rate of say 12%. Is there a scope for me to reduce this particular customs duty by virtue of any of the provisions? Answer is a big yes, where there is something called your duty-free imports, DFIA, DEPB, duty exempted passbook, and EPCG, export promotion capital, export promotion council, where capital goods can be imported with a nominal reduced rate of duty. So there are various provisions. When you read through your foreign trade policy, that is one chapter. It is like a white elephant where enormous exposure in terms of your working capital management, where you can save your customs duty, can be examined. Also, if the business model is such a way that, sir, I import my raw material, I use it in my manufacturing activity, 80% of the raw material is sold in my domestic market, 20% of my raw material is sold to the export market. Now, can I explore where I can import raw material without payment of customs duty? Again, answer is a big yes, where I would recommend you to wait for the foreign trade policy provisions, where you can learn all these aspects of EPCG, DFIA, and DA, various schemes which are there. So that is one particular value addition you can think of. Second, deferring the payment of customs duty till the orders are received by customers from the import consignments. I have a business model where, if you look at the assessor's business, he has got a 10 by 20 office size, where he has got a office with a cabin, 3 laptops, and one server, where entire business happens in that by room of 10 by 20. What he does, he has got a supplier abroad. He has got a customers located in India. He procures various orders from the customers. Back to back, he procures the consignment from my supplier abroad. So in that scenario, is there a mechanism for working for capital management? There is one mechanism called bonded warehouse. So I would recommend you to read this particular concept, where you can give a value addition to the business from that particular concept. Next, exposure of duty on goods imported for deficiency in performance. Now, then I have imported the goods, and after importing, I noted that there is a consignment where there is a damage, where the goods are not in a standard quality norms which were agreed upon. So if I export that particular consignment, what will happen to the duty already I have paid? Assuming I have paid a consignment on which a customs duty of 5 lakhs, and entire consignment I have to send it back to my supplier. What will happen to that 5 lakhs? Can I claim something as a duty drawback? There again, answer is a big yes. Watch for provisions under customs law, section 74, 75, where the next sessions which are set, you're going to understand the answers for these particular provisions. Finally, eligibility of duty drawback and encashment of GST accumulated on account of purchases. Now, this is one particular arena where many of the professionals do a due diligence, where they do a cash flow management, they do a balance sheet management, where they give a advice for the customer on foreign trade policies read with your customs provisions and encashment of refund of GST when export consignments are there. This is one last leg where a cash rich mechanism can be brought in by way of a value addition in the entire gamut of foreign trade policy read with my customs provisions. So these are a couple of examples which I felt let me bring into your knowledge, where you keep in mind when you read these provisions, you don't only read from an examination point of view, rather you also read from your career point of view. There is one question from Mansi. What is the difference between duty and tax? We will have a clarity, Mansi. When we read through our provisions, we will discuss and we'll have a clarity on those elements. Now, to start with, the basics of customs. Now, to understand this particular term customs, we need to travel in time. Where we think of this era where kings and nawabs used to rule various kingdoms. Those days, friends, when someone comes into the territory for the purpose of doing a business, The person who is coming into the territory, that particular person, gentleman, has to please the king or a nawab, where he brings a gift to that particular king, where he tries to please that particular king, saying that this particular thing has been brought in, offered to you as a gift for me to get into your territory and do a particular business activity. Over a period of practice, that custom or that tradition of giving gifts have become something called shulka. If you recollect our Kautilya's Ardhasastra, where this particular gentleman has written, whenever someone comes into the territory or a kingdom, and when he goes out of a kingdom, all the goods which they bring into the kingdom, all the goods which they take out of the kingdom, at the entry or exit, there is a custom, there is a tradition that they have to pay some nominal amount as a tax. Now, that particular custom, which was there in those days of monarchy, over a period when we have moved into an era of democracy, this practice of shulka, this practice of tax has taken its name as customs. So the name Customs Duty, Customs Act, what we have read today, it borrows its origin from that particular era of your monarchy. Essence and origin, this is from our ancient days where we have a barter system or trade. Even in those days of our British ruling, whenever someone comes into Indian soil for the purpose of doing business and trade, this practice of collection of taxes were existing, which has become a practice as of today. Prior to the Customs Act, what we have today, we have this in 1962, a Customs Act has been promulgated. Prior to this, we had this tax called C Customs Act 1878. This C Customs Act 1878 has been changed as the act which stands today, as of today, called Indian Customs Act 1962. Read with that, we have something else called Customs Tariff Act 1975, which has replaced erstwhile Indian Tariff Act 1934. So here, friends, I would like to draw attention of you for the difference between these two things. When you look into any of the notifications, there is something called tariff notifications, non-tariff notifications. If you happen to see your income tax, in income tax you have only one set of notifications. When you read into your indirect tax, could be your GST law, could be your customs law. When you read a notification, it says customs notification 13 of 2017 within brackets NT within brackets T. NT stands for non-tariff. T stands for tariff. So any notification which tries to speak on the rate perspective, on the tax perspective, determining what is the rate of tax, determining what is the exemption, what is the amendment with respect to the tax, all those are dealt with your tariff notification. Other procedural aspects, registration, payment of taxes, compliance with the various returns and other procedural aspects, we have something called non-tariff. So friends, these two things called Tariff Act, Non-Tariff Act. Tariff Act, Non-Tariff Act. These two things we have to keep in mind when you read these two notifications. Moving on further. Customs Act embodies itself in erstwhile. Prior to Customs Act, when we see on the Indian soil, the various laws have been there which have been clubbed together as Customs Act. Prior to our Customs Act, we had this C Customs Act, Inland Bonded Warehouse and Land Customs Act. Basics, not much to do with your academics per se, but when you travel back in time to read the origination, these are the various laws. When what someone has to read, how those laws have been brought into a conglomeration, a merger of these erstwhile laws into your Customs Act, which happened as of today. Now, the origination for any of the act we read in our curriculum, Constitution, Indian Constitution. When we read of this particular law, we have to 245. This Article 245 has a power, has an authority where the powers have been conferred for enacting various laws to Parliament and to various legislatures of a state. So when I talk about Parliament at a nation level, at a Indian territory level, At a broader level, when laws have to be formulated at a national level, Parliament has a right to formulate. At a state level, if someone has to think of formulating a law, then legislature of a state can formulate. The rights have been bestowed in my Article 245. No law made by the Parliament shall be deemed to be invalid on the ground that it would have extraterritorial operation. This is one particular provision when you read your integrated tax, IGST. There is one particular authority vested in your integrated tax where any activity which has been done on a soil which is not an Indian soil, there could be a possibility of not stretching my taxation called applicability of a reverse charge mechanism. I repeat, levy of a tax called IGST on a transaction which has taken place on a foreign soil, which has been rendered to a person who is residing in India by application of this particular provision, whereby my GST provisions attract levy of a tax called IGST. Moving on, Article 246. This is one particular provision. Which gives the authority for formulating laws on various subject matters. So as of today, friends, when we look into this Article 246, this is given a authority to govern a law at Parliament level, at state legislature of state level. So if you have to look into this particular authority, I have something called Schedule 7. Seventh schedule to the Constitution, where List 1, Union List, List 2, State List, and List 3, which talks about your concurrent list. So as of today, when we are talking about our customs law, I draw attention all of you to this List 1 called Union List. In this particular Union List, there is an entry called 83. Under this list called 83, my customs duty has been brought in, all the customs provisions have been borrowed from. So this is the basics which we need to recollect when we talk about our customs law. So friends, from here we move on to our hardcore technical discussions, and these definitions what we are going to study. These are the definitions at large you will be using in all other sessions which we are going to study further under our customs law. First definition called assessment. I would take 5 minutes time if we have assessment. So this talks about the term called assessment. Assessment means determination of dutiability of any goods, the amount of duty, tax, cess, or any other sum so payable, if any, under this act or under Customs Tariff Act or under any other law for the time being in force with reference to. I'll halt here. Now, there was one question from Mansi. Answer to your question, Mansi, it gets covered over here. Understand carefully. This term assessment draws its importance where this assessment process, assessment mechanism is applied. Why? For the purpose of determining something called dutiability. Determining something called dutiability. What do you understand by the term dutiability? Dutiability is nothing but whether if any duty under this particular act can be applied on what? On any goods. Now, please keep in mind the basic thin line of difference between your GST law and your customs law. When I talk about my GST law, when I read my definition, when I read my levy, there all the mechanism, levy, etc. goes in relation to a person who does a transaction, in relation to a supply. But unfortunately, when I travel to my customs law, always a transaction of assessment, a duty gets attracted on in relation to goods. It is not in relation to person per se. So this is one thin line of difference where the term person used in my GST law, the term any goods used in my customs law. This is the bifurcation with respect to levy, with respect to payment of taxes. When I say tax, Mansi or any other person who is listening to me, I interchange my term called duty or a tax for the reason when I think of duty or taxes, my duty gets levied under this tax, under this particular act called Customs Act. The term tax, the term cess gets levied by virtue of any of other laws which are there in existence at the time when this particular assessment takes place. So friends, this term assessment says I have to determine. This is a process way I undertake to value. I undertake to determine whether there is a dutiability. How do I get to know? When we read through further provisions, we get to know whether there is a applicability of this term called dutiability. For simple understanding, when I say dutiability, it means that applicability of duty. What is the duty? Customs levy on of any goods and amount of duty. Now, here what I am doing, first I have decided whether or not these goods are dutiable. Once I know that these goods are dutiable, I went to identify something called amount of duty, where we interlink with this something called valuation. Next topic which you're going to discuss upon, you'll have a detailed discussion called valuation. Once I know what is dutiability, I go on to identify something called what is the amount of duty. I'll determine my amount of duty read with my section 14 called valuation. So I'll apply this particular duty. I do quantification of duty as per my section 14. In addition to duty, tax or cess or any other sum. Now, when I refer to tax, it could be an integrated tax. When I refer to a term called cess, it could be a integrated cess, my GST cess, or any other sum. There could be a sum like there is a tariff value. When you refer to Schedule 4 of Central Excise Act, when I look into my Central Excise Act, there is something called Schedule 4. My Schedule 4 deals with something called tobacco products. How do I determine the value of duty in relation to tobacco products? That is not on the basis of value. That is on the basis of length of the product. In case of my Schedule 4 items, on the basis of the length, on the basis of the mass of the tobacco product, I determine something called duty. So friends, when we read this language, we are referring to various provisions where a tax, cess or any other sum so payable, where various administrative provisions comes into picture, if any, under this act. When I refer to this, under this act, my Customs Act or Customs Tariff Act. So either Customs Act, Customs Tariff Act or any other law. What is any other law? My GST law, my Central Excise provisions. So friends, indirectly my customs law makes me to travel to various other provisions called Central Excise provisions, GST provisions. Why? For the purpose of assessment, for the purpose of determining what is called duty, and quantification, something called amount of duty. So I apply all these aspects. In the process called assessment. This term assessment is very important from examination point of view. A theory for 4 marks from your examination point of view can be tested for the implication of the term called assessment. For the timing in force with reference to. Now going further. Mansi, if I answered your question, please confirm. If I have not answered, you have any further doubts, please let me know, man. The tariff classification with reference to tariff classification of such goods. With reference to tariff classification of such goods as determined in accordance with the provisions of Customs Tariff Act. Now here, once I have understood, first and foremost, there is something called goods. Only when the goods are there, my process of assessment starts. If the goods are not there, what will I do with my assessment? On what I will do with assessment? As I understand from my customs law, if there is no person, I have no meaning to conduct this activity called assessment. So where there is a reference to the goods, and once I determine that these goods are dutiable, I go into understand something called amount of duty. In the process of this assessment, I take a shelter under my Customs Tariff Act. For what? For the purpose of my classification. Now, classification, this again I'm not going to discuss in detail. There is a separate session which is going to discuss. This term classification draws importance to identify the goods what I'm going to talk about. I'll give an example here. So when I have imported a television, when I go to the customs officer and I'll say, my dear officer, I have imported a television. Please determine the duty for this particular television. Now this officer says, look, you have a television which has got a CTD, which is called as a picture tube. Is the television fitted with a CTD, ordinary CTD, which is called an ordinary picture tube? Travel in time 2 decades back, where we had that black and white TV, where the black and white TV used to have something called a monitor, which is have a CTD LED connectors or nodes, which is so-called your picture tube. Is the TV connected with this picture tube, or is it a LCD? Is it a LED screen? So that means what I'm doing, I'm trying to identify television fitted with a CTD monitor, fitted with a LCD monitor, fitted with a LED monitor. No sir, not all this. Then what? So based on identification, for each particular composition, my classification is different. When I look into chapter 84, 84 has got various entries. So here what I'm doing, in the process of assessment, I draw shelter. I look into my customs tariff act for identification called classification. I would like all of you to write down in your working notes all those examples which I am taking through in the process of explanation. Why? When you read through your institute material, when you refer to these technical terms with that particular example, it will be easy for you to present your answer in your examination. So this clause A helps me to refer to something called tariff classification. Okay, I have done tariff classification. What should I do further? It says the value of such goods as determined. Value of such goods as determined. For this, we travel to section 14. Chapter 4 deals with your section 14. Today's session we are not going to discuss because we have a separate detailed session. We are going to discuss in depth called valuation. Valuation of such goods as determined in accordance with the provisions of this act and the Customs Tariff Act. Now keep in mind, why should we stress so much importance of valuation? Already we have studied in our GST law the same inferences we draw into a customs law. Related party transaction, non-related party transaction, value of goods available, value of goods not available, goods imported on FOC basis, goods where there is a value of services given on free of cost basis, goods gone on for repair basis, goods imported for re-export purpose, various permutations and combinations, goods identifiable, goods not identifiable. So there my assessment says I'll fall back to that particular chapter, I'll fall back to those provisions for determining something called value of such goods. So friends, when we travel, we have a couple of examples which we have set in the backdrop of determining the value of goods. Moving further, exemption on or concession of duty, tax, cess or any other sum consequent upon notification issued therefore under the Customs Act or Customs Tariff Act or any other law for time in force. Very important. Again friends, please read this from your career point of view. Now when I'm talking about assessment, I need to keep in mind something called exemption. Exemption as a simple term, exemption giving a benefit, giving a value or a benefit which is foregone. Government authorities, revenue come forward and say, I exempt, I don't want to collect any tax. Or concession of duty, concession. What is concession? Like your reservation quota, SC, ST, OBC, etc. Concession of duty. Instead of paying a regular rate of tax of say 18% or 12%, you pay nominal of 5% or 2%. Example, sir, I import the goods which have to be used in my research project. Say I am a research organization. I am going to develop a particular product, a machinery. This machinery I am going to supply to ISRO, which is going to get used in my satellite. So again, they want to give a concession. How? You get a certificate from so-and-so scientific research or scientist having so-and-so ranking of E or D category, who gives a certificate saying that these goods intended to import are to be used in this particular project. Concession of duty. Instead of paying regular rate of tax, I am going to pay a reduced rate of tax. In addition to that, tax, cess or any other sum. So they're saying that look for taxes or any other sum consequent upon notification issued under this act or customs tariff act. So you want to look for exemption, you want to look for concession, look into customs act, look into customs tariff act, look into any other law for time being in force. Now, I'll give an example here. Say my GST law says any machinery which is to be used in agricultural produce manufacture in the process of cultivation, then the rate of tax is nil. So what will happen whenever I import a machinery which is to be used in my agricultural produce, because my GST law says the rate of tax is nil, the same exemption notification gets expanded to my customs law. This is the importance of your clause C. So friends, when we are doing the valuation, etc., keep this particular assessment process in back of your mind. Next, quantity, weight, volume, measurement or other specifics where such duty, taxes or any other sum is leviable on the basis of quantity, weight, volume, measurement or specifics of such products. As I was talking a while ago, we have drawn attention to Central Excise Act. In Central Excise Act, there is something called fourth schedule. When I go to Central Excise, when I go to this fourth schedule, this particular fourth schedule talks about your tobacco products. In my tobacco products, there is a reference to levy of a duty on the basis of weight, on the basis of height. So there is a measurement. So based on that particular principles, I adopt those principles or I define my own principles. How? Based on quantity, based on weight, based on volume, measurement, etc. A mechanism, a means for the purpose of ascertaining my duty. Further, also I may whatever aspects I have read till now. In addition to that, I try to determine the duty on the basis of origination of such goods. Now, recently, if you recollect COVID measures under customs law, couple of notifications have come under customs law where they say any goods which have origin from China, there is a applicability of import duty, anti-dumping duty. Now, most of the businessmen, what they have done, instead of getting the goods directly imported from China, those goods from China went to say some other territory, say Japan or USA or Malaysia or Singapore. From there again enrouted back to India, wherein customs law said I'm going to levy something called anti-dumping duty on the basis of origination of such goods. So this is also one mechanism, one of the factor for determining or assessment of my duty. So friends, keep in mind, when we talk about assessment, my assessment can also take place on the basis of origination of such goods. Any other specific factor which affects the duty, tax, cess or any other sum. Having said, I'll have an ancillary entry. I determine my duty of assessment on any other factors which I keep in mind relevant for. And the term assessment includes provisional assessment, self-assessment, reassessment, and any assessment which the duty assessed is nil. Now, provisional assessment, where various reasons, various difficulties, where customs authorities say because of what you can say COVID pandemic, we are not in a position to verify all the documents which are physically traveling in. Friends, if you happen to, I don't know how many of you have exposure in customs law. Various trade measures were brought in by the customs authorities after pandemic COVID. Entire process was automated, where earlier bunch of documents have to be printed and taken for assessment called provisional assessment. What happens in case of provisional assessment? There is something called fixing of a duty. There is something called SVB loading, special valuation bench. Now, what happens whenever there are transactions between related parties? When I get the goods imported into India, I get a valuation mechanism under SVB, Special Valuation Bench, where the officer concerned add something called loading into the imported price. He'll say, though you have imported the goods at arm's length price, I bring in something called SVB, called a percentage, a notional mechanism of loading into the goods. That particular mechanism is valued for a period. Say example, it is valued for a period of 2 years. End of the 2 years, I have to go back to that special valuation range. I have to get that valuation again done again for the further period of 2 years. Now, what if, because of the measures or controls beyond the control of customs authority, the officer who is in that position in charge is not well or is not available? In that scenario, they say provisional assessment. You get the goods cleared on provisional assessment, get that valuation of SVB done later, and reassess and pay the differential duty or get a refund of the duty excess pay. That's called provisional assessment. Self-assessment. What I will do, I'll file my bill of entry where I declare what are the goods I'm going to import, what is the classification for those goods, what is the rate of tax applicable, what is the value on which I have to pay tax. I do self-assessment. That's called self-assessment. Reassessment. Like any other income tax or GST law, assessment done by the officer concerned is called my self-assessment. This is my definition of assessment. So any doubts of this definition on assessment or any other aspects which you have till now, please post into your question window so that I can answer those questions. There is one question from Sumit. What does it mean that exemption to the levy either on grounds of morality or equity? This is covered in a little while, Sumit. I'll come to this particular aspect called exemption on the grounds of morality or equity. I'll cover that particular, Sumit. So it's an indication that you people have read and come prepared so that you are having your doubts posted. I'll take care of that, Sumit, in a couple of slides to come. Next definition called bill of entry. Friends who have knowledge of customs, it is easy for you to understand. People who doesn't have any exposure in customs law, I'll explain this particular mechanism. This bill of entry means a bill of entry is referred to in section 46 where entry of goods on importation, where my goods which have been imported from a foreign soil to the Indian soil, I make a declaration to the appraiser or assessing authority. That particular gentleman, who is so-called customs officer, he examines the list of goods which were declared by the shipper. The person who is in charge of a ship or vessel, he gives a list. This is the consignment, this is the goods which have been shipped on behalf of this particular assessee. That will be valued with your self-assessment. He does the appraisal and he says, you have paid so-and-so customs duty using so-and-so challan. You can get the goods cleared for your home consumption. You can take the goods from the customs location, customs premises to your factory. We call that as from bonded premises or customs area to domestic clearance. Technical term we call as home clearance. You can write in your working notebook called home clearance. When I file bill of entry, it is as good as getting a permission from the officer for home consumption. When I say home consumption, to take the material from there to my factory or to deliver the material to my customer factory. This is called my bill of entry. Next, customs area, the area where customs station or a warehouse. This area includes custom station or warehouse and includes an area in which imported goods or exported goods are ordinarily kept before clearance by customs authority. All the premises which is under the supervision of customs authorities is called customs area. When you happen to visit couple of your client place in the days of your internship, there is something called STPI. They used to write something called bonded premises, SZ, bonded premises. When you happen to visit these client places, at the entry, at the security, you are supposed to give a declaration. There is a form. You will fill a particular form where you will give a declaration that you are going to enter into a free trade zone or SEZ, special economic zone, where you are going to say that I am aware of my rules and regulations, my responsibilities, the list of goods which I am going to carry into the SEZ premises, and while coming back, what are the list of goods which I am going to take back. My purpose of visit along with the list of goods which I am going to take in. Similarly, friends, in customs authority, customs area, I am supposed to give a declaration what I am going to take in, what I am going to take out from that particular area. Customs area. Prominence comes from that particular area. Dutiable goods means any goods which are chargeable to duty, This term dutiable goods means under my customs law, any goods which are chargeable to duty and on which duty has not been paid. My term duty includes my tax. Kamlesh, I think one of you've asked this question where my term duty also includes tax when I talk about your dutiable goods and duty. Duty means duty of customs leviable under this act. Entry in relation to goods means an entry made into a bill of entry, shipping bill or bill of export. Now, I'll explain these terms again for your practical point of approach. Once you get qualified and you join a corporate, you go for interviews. These are the technical terms which you should have a basic understanding. Bill of entry, as we have understood, the permission to get the goods clear. Shipping bill. This is a document which indicates what are the goods which have been carried for export purpose. Shipping bill or bill of export. This is a document which indicates what goods I have exported out of my Indian territorial waters. Next, moving on. Import, with its grammatical variations and congruent expressions, means bringing into India from a place outside India. And this term India, I would strongly say it's like a googly, where examination could be your direct tax, could be your indirect tax. Expect one theory question for 3 marks. Define the term India. India includes customs law. Very, very simple definition they have given. India includes territorial waters of India. Simple. India includes territorial waters of India. What is your territorial waters? That is your Indian customs water. I'll explain this definition for ease of your understanding. When I say territorial waters, whatever border we have India, there is something called land soil, land mass. From that land mass, there is a measurement called 12 nautical miles. Till 12 nautical miles, my Indian territorial waters, that term India, my jurisdiction, my territory of India gets extended. From the land where the sea starts, the ocean starts. So how do I measure? When you travel from the land to the sea, as you go through, there is a depth of the sea which gets on increasing. The depth of the sea, where on an average 20 meters gets started, that is the point from where my 12 nautical miles get measured. So any object, any vessel or any boat or ship which comes into that particular territorial waters, it is deemed that it has landed in your Indian territorial waters. Only with a prior approval, it can land into your Indian territorial waters. Now, there is something called exclusive economic zone or territorial waters. This particular exclusive economic zone extends beyond your territorial waters. As of now, 200 nautical miles. I repeat, as of now, 200 nautical miles is called your exclusive economic zone, where your maritime business, etc. happens. Any vessel to come in, any vessel to leave from the Indian soil, up to a stretch of 200 nautical miles is called my territorial waters. Tariff value means the value which is fixed or referred in my Tariff Act. Warehouse means a public warehouse licensed under Section 57 or a private warehouse licensed under Section 58 or a special warehouse licensed under 58A. Now, you need not remember this, but this term warehouse is one concept which has got a lot of value addition, where you have a constraint of space, where you want to store the goods before you pay the customs duty to find a relevant customer. This is one particular term has got much value addition in terms of your career post qualification, warehouse. Now, we will start with our main discussion called levy and exemptions under customs law. Starting determining factors, the basic factors which governs my levy. how do I determine my levy of customs duty? So I'll start with this term called levy, where I try to identify a particular transaction, the goods which are liable, or where there is a crystallization of liability. Whenever I talk about the term levy, I try to crystallize or I try to fix this responsibility or liability called levy. Assessment we have discussed in detail, where there is a various process how we determine the duty. Collection of tax or duty. Now this is a process where my taxes, how they collect and how this administration function happens. So this term collection of tax or duty is a administrative mechanism where my collection of taxes do happen. So friends, keep in mind, whenever we talk about levy, first I need to fix my liability. Then I'll try to go on to assess, to identify what is the classification, what is the tariff value, what is the value of the particular goods. Then what is the rate of tax for quantifying what is the duty. Third, collection of tax. I'm going to identify when should I collect taxes. I would request you to recollect our examples, what we have discussed. Once I know when the goods have come, first and foremost, whether it is dutiable. If I say there is a levy, then my duty gets attracted. Assuming the duty gets attracted, what is the mechanism? How do I find what is the duty I have to pay? Having identified what is the duty I have to pay, what is the point in time when I am going to pay my tax? So these three elements, leaving my assessment, because there is a separate chapter called valuation, we will discuss on this particular levy and also my collection of taxes by virtue of exemption notifications. Now, first and foremost, my customs duty is based on below factors. Customs duty is on the goods. I repeat, my customs duty is always on the goods, not on the person. Recollect your GST law, it is referring to a person, supply made by a person in the course or furtherance of business for a consideration. Now all those elements are there in my GST law. So they are trying to hold the person per se. Here we are trying to refer to the term called goods. Whenever I think of my customs law, I talk about the goods, the point and circumstance under which customs duty is leviable. Procedure, assessment, exemption, we will discuss in detail. What exemption notifications are there, how we draw inference from exemption notifications. Then customs duty is leviable on a goods and not on person, we have discussed. Now section 12, which is your charging section. Very important. Take your working note and write all those important key terms with the examples which you are going to discuss and understand. Charging section says that except as otherwise provided in this act or any other law for timing in force, means except if there is an exemption notification in this act, except if there is an exemption notification under any other law for timing in force, means the goods when it has come for assessment, the goods which have come for scrutiny, that point in time, what does my GST law say? That is what, but for that exemption, the duties of customs shall be levied. The duties of customs, that means once I know the goods are dutiable, the customs, duties of customs, I use a technical term called duties of custom. Why do I call duties of custom? Why can't I call a customs duty? Why can't I call a duty? Because friends, the customs duty embodies in itself, mixes in itself various provisions of central excise and GST. Central excise, schedule 4, I talked about tobacco products. There is also something called your petroleum products. GST law, there is various exemption notifications and tariff act, where various rate of tax is determined. Now when I look into my levy of customs duty, it starts with my customs duty. Then it goes to something called social welfare cess. Then it goes to something called my levy of IGST. Any other tax called special additional duty. So friends, there are various elements of duty which is embodied into my customs law. That is the reason I call duties. So can it be called as a duty? Interpretation of statutes, singular includes plural with the intent of the law. When I talk about a customs duty, it is nothing but customs law, also levy equivalent under central excise law, also levy equivalent under GST law. So why do you need to have all these duties? Now, this is a practice, or this is a policy of the central government or of the parliament. What they have done, look, when the goods are getting imported into India, I need to have a trade balance. To have that trade balance, I have to bring various elements of duty which gets embodied into itself, which are ordinarily levied if the transaction takes place on the Indian soil. So from that backdrop, from that particular backdrop, my duties comprises of customs law, also provisions levy under excise, also levy under your GST. That is the reason I call that as duties of custom shall be levied at such rate as may be specified. So friends, I'll refer back to my Customs Tariff Act where there is a rate, such rate. So wherever the rates are there, I tend to adopt such rate for the purpose of quantification of my tax, as may be specified under Customs Tariff Act or any other lot of a timing in force. So when I look into the customs, duty of customs, a basic question. Sir, if I know under customs law, the rate of tax, the rate of duty is 12%. For those goods under GST law, the rate of tax is 18%. Sir, is it right that I levy customs duty 12%, I levy IGST 18%? Answer is a big yes. Whatever rates prevalent under that particular law, that gets prevailed. So what if alternatively, my rate of tax under customs is 5%, my rate of tax under GST law is 18%. Can I do so? Higher rate and loading of lower rate on that rating of higher? Answer is a big yes. Irrespective of the individual laws, I tend to adopt that rate which is prescribed in my Tariff Act. I go with GST law, I go with my excise law. Now if you recollect, the simple reason why my Central Excise Act is continuing, why my GST provisions are brought in, the simple reason is I am trying to bring in those elements of levy of Central Excise and GST into this particular customs law. Why, sir? Policy. Whose policy? Parliament. They have made a policy for welfare of the economy, levy of various duties, where there is a level playing field for those goods which are entering into India to compete with the domestic market. There's one question from Geeta. Explain shipping bill of entry and customs station. Definitely, Geeta, I'll come back to that. I'll finish this particular levy section and I'll come back to that particular aspect, Geeta. Wait for 5 to 10 minutes. We'll finish off this and then we'll come back to that particular definitions. So coming back to this particular discussion on customs, hope you are clear with duties of custom, you are clear with rate, and also you are clear with this law where I have to look for the rate. Then going further, this particular aspects I apply on goods imported into or exported from India. Now what I am doing, I am levying a tax, I am levying a duty. I'm levying. Okay, let's going further. Wherever I say duty, please keep in mind my duties of custom is including all other taxes. A couple of people, I think Kamlesh and other people, Mansi, who have raised this term duties of customs is very clear, which whenever I say refer to duty, this duty is nothing but this includes my taxes also. What it says, I apply these rates and taxes which are prescribed as per the any other law for timing in force on goods. Look at the language. I apply those on goods. Definitely I cannot apply on person. Imported into. Sir, I understand what is imported into. Exported from India. So when you import goods into India, when export goods out of India, then I have a charging section called levy. Section 12 levy gets triggered. Sir, why do you want to levy my duty on goods exported out of India? Reason? Goods which are of high importance in nature, goods which are exported on a rare occasion, there is a levy of duty on exports. Example, you have this N95 mask. Now, when COVID pandemic scenario has come in, many people who have been trading in this mask, they have been exporting out of the nation. Like I'll give an example. There's one nation, let me not name that particular company, but there are many MNCs where they have imported this mask from India along with various goods which are getting exported out of India. I strongly recollect March was the peak season. Many of the masks got exported out of India. Unfortunately, on a wrong route along with the material which should not have happened. Customs authorities have come vehemently on this export. What they have done, they said any masks which are exported, customs duty is applicable 200% of the regular rate. Now, if the value of mask is 40 rupees, I have to pay customs duty of 80, whereby the value becomes 120. Now, I'm making my exports so uncompetitive where trader thinks not to export the goods. In case of onion, in case of my sugar, to regulate my domestic market, I levy a duty on exports out of India. So friends, when we talk about duty charging section, it says my duties of customs are levied. How? As per the rates, where customs tariff act read with any other laws for timing enforced on goods. Those goods which are imported into India, on those goods which are exported out of India. So this is my charging section, section 12, clause subsection 1. I'll go back to our definitions. There is one question from one of friend who wanted to understand this term called bill of entry and this customs area. This term bill of entry, please understand Geeta, customs, this particular shipping bill. Shipping bill is nothing but a document. Shipping bill is nothing but a document which conveys that the goods which have been exported out of India. Shipping bill is a proof. It is a proof where it is given by a customs authority which consists of the details of transaction which were exported out of India. So what it will have? My name as an assessee. If I am registered with GST, my GST number. If I'm having IAC, I should have an IAC, my IAC number. What goods I have exported, to which country I have exported, what is the value I have exported for, what is the Incoterms, and also my classification of those goods and other formalities or other basic information. So shipping bill is nothing but a document which communicates what goods have been exported out of India. That is called shipping bill. Next is your bill of entry. Bill of entry is a permission from a customs authority where it consists of the details of material, where the name of the person who is imported, the value of the goods, the description of the goods, HSN classification, rate of tax, and various taxes, duties of customs paid on that particular thing, or bill of entry. Customs area, like your bonded area, this is an area where customs authorities have the authority where goods which are imported into India, goods which are to be exported of India are ordinarily kept. So this is my definition of my this term called customs area. Hope I have clarified your doubt, Geeta. Subsection 2, levy. The provisions of subsection 1, that is, whatever we have discussed above, shall apply in respect of all goods belonging to government as they apply in respect of goods not belonging to government. Very important bifurcation. None of the law have this sort of bold entry into the levy section. Belongs to government. Now it says, look, whatever I have talked in my this particular levy under subsection 1, all those principles, all those provisions are applicable to the goods which belongs to government. Now when I say government, state government, central government, I'll give an example. Maharashtra Police Department, they wanted to import some bomb detecting machines. Like every state jurisdiction has got their own policies and regulations. Maharashtra Police Department, they wanted to import some equipments which are used in the process of detecting bomb verification, the local police. So when I import those bomb detecting machinery, those goods, are as good as the regular goods on which my duty of customs shall be levied. So they say the goods imported by customs, government or any other person, it is equivalent to be called as goods. I am least bothered. The goods are imported by government authority or a non-government authority. Whatever goods are imported, I levy on section 12, subsection 2, duties of customs. Now, basic understanding, there is no specific exemption to government, goods imported by the government. Goods imported by Navy, police, defense are fully exempt by virtue of a specific exemption notification. So now it becomes an unplaying game field. Couple of industry I have to give an exemption. So what they've done, first they have brought everything under levy. They haven't bifurcated the dutiable, not dutiable. Whatever comes to customs, import or export, there is a levy under section 12. Now, having said that there is a levy, they have brought in couple of notifications where specific goods which are imported by either Navy or defense or police, there is an exemption notification. Now, having read that, when I read this section 12, there are a couple of other adjoining sections or other ancillary sections. Like example, when we talk about Ramayana, it is not that always we talk only about Sri Rama. Whenever we talk about Lord Sri Rama, we need to talk about Hanuman, we need to talk about Sita, we need to talk about Lakshman. There are other three familiar personalities whom we also talk about. Similarly, when we talk about section 12, there are three other familiar sections called section 13, section 22, section 23. So friends, these three are the other personalities which are to be read with my section 12. Like your Hanuman, Sita and Lakshmana. Now we have this game, Rama, Sita, Lakshmana, Hanuman, like we draw a chit and we find whoever gets the chit of Rama, we have to find Sita. Similarly, whenever I read my section 12, I have to read section 13, 22, 23 together to understand something called levy. Now section 13 deals with pilferage of goods. I have a detailed slides we will discuss in section 13 at a later point. Section 22, reduced duty, that is called abatement. Section 23, remission of duty. I would recommend take your working note, write down section 12, circle, next to that put a flower bracket, write down section 13, pilferage, section 22, abatement, section 23, remission. Now, examination, any question which is to be asked, a problem other than a theory question of assessment, this particular three provisions read with my section 12 is the key problem which you can think of and also very important. So we will understand little later what is the importance of these three sections. Next. Goods shall be imported or exported to or from India. Friends, please keep in mind, my charging section says that there shall be a levy when the goods are exported or imported into India. Duty to be charged at such rate as per the Customs Tariff Act. Government goods to be treated at par with non-government products, which we have understood. Then relevant case laws for designing chargeable or taxable event. Now, there are a couple of case laws where they have discussed at length. Please determine the event, when should I pay my tax? We will look into the provision, then we will discuss in detail for having a clarity. First point, goods cleared for home consumption. Now, I draw attention of query which was asked by Geeta and where she asked, so what do you mean by bill of entry? That particular definition of bill of entry read with this particular term called home consumption. What it means that whenever I have imported the goods, my intention is to use the goods in my factory. So when I get the permission, that is when I file my bill of entry for home clearance, home consumption, that means I take that goods into my domestic tariff area, DTA, domestic tariff area, which is beyond your customs bonded warehouse. Any area which is beyond your customs area in India is called my home consumption. So when I'm getting the goods into my home consumption, how do I get? I'll get a permission. Where is the permission? My bill of entry. So my charging section says import of goods commence when they cross territorial waters, but continues and is completed when they become part of the mass of the goods within the country. Just keep in mind carefully. When I do an import transaction, the import of goods started when they crossed territorial waters. The moment it crossed territorial waters, it is said that goods have been imported. It is still a continuing activity. It continues. My import, the moment it crosses territorial waters. Just halt here and listen carefully. Sir, there is a definition called India. You have given something called territorial waters. Let us take an example. The goods have come to territorial waters. When it has come, say on 31st December 2019, but continues and is completed. Now, when is that journey? My journey of import gets completed when they become part of the mass, where within the country. Now, say the goods have come to customs port on 31st December 2019. 2nd January 2020, it has come out of the customs area by virtue of filing of a bill of entry. Then it says my journey of import stopped. When it stops, when it crosses the customs, then it says that my import has ceased. When it becomes part of the mass of the goods within the country. When I get the goods out of my customs area, or when I get the permission to cross, my import is stopped. My process of journey has been stopped. So here keep in mind, when the goods have imported, till the goods have become part of the mass of the country, that is other than my customs area, until such point in time, my import continues. So here when I talk about levy, when the goods are cleared for home consumption, the moment the goods come to my customs waters or when it has come to customs area, I wouldn't say my journey has completed. So why is that so important? We look into for this definition called goods clear for home consumption. Why should we understand this journey of import? I'll give an example. On 31st December 2019, my rate of customs duty is say 12%. On 1st January 2020, the rate of customs duty from 12% was made as 18%. Now, that is a point which is important for us to determine. So here, my levy gets triggered when goods are cleared for home consumption. Until the goods are cleared, I cannot levy my duties of custom. So here, 2nd January 2020, the day when I clear the goods to the domestic tariff area, to the home country, then my duty gets crystallized, my levy gets crystallized. As long as it is in the customs area, my duty does not get crystallized. So friends, keep in mind, when we talk about this particular domestic clearance, until I file a bill of entry, that is for home consumption, my levy does not get crystallized. The taxable event being reached at the time when the goods reach customs barrier and bill of entry for home consumption is filed. So my triggering point is filing of bill of entry. So friends, keep in mind, examination, a simple theory question for 6 marks will be asked. Goods have come to Indian territorial waters on 31st December 2019. The assessee filed bill of entry for home clearance on 2nd Jan 2020. Rate of tax on 31st December 19, 12%. Rate of customs duty on 2nd Jan 2020, 18%. Determine the rate of tax of customs duty to be paid on a consignment having a value of say 20 lakhs. So what I will do, on the date when I file bill of entry, my rate of tax happens to be 18%. My charging section levy gets triggered on that date. Till I file my bill of entry, my charging section does not get attracted. Friends, hope you are clear with this my term called filing bill of entry. aptly what Geeta has asked has been helped here for many of other students to understand the relevance of this term called bill of entry. Let me see quickly any other questions before we go further. J. Srivastav. For rates of duty, do we have to see rates as per Tariff Act or GST Act or whichever is beneficial? Yes, J. Srivastav. I'll draw your attention to this question. Let me repeat for benefit of other students. J is asking a question. Sir, should I look into Customs Tariff Act? Should I look into GST Act? Or should I look into any other act? Whichever is beneficial, can I adopt that particular rate? Answer to that question, J. I will not look only into one of the act. I have to look into Customs Tariff Act. I also have to look into my GST law. I also have to look into my Central Excise Act. Reason, every calculation, when I do the calculation, my customs duty will be as per Customs Tariff Act. Levy of IGST will be as per the rate of my IGST law. Levy as per Central Excise will be the rate as per my Central Excise law. So combined reading, when I have to look into my charging section, all the three acts and independently, irrespective of the rate of tax, what is there in customs, I levy customs. When we take a problem J, you'll have a clarity how do we calculate. So till such time, please understand that I have to look into customs law. I also have to look into GST law. I also have to look into my Central Excise law. So answer for this question, J, I have to look into all the three. I cannot pick and choose. Central Excise is 5%, Customs law is 12%, and the GST is 18%. Higher of these three or lower of these three, I cannot hand pick and choose. Mandatorily, I have to go through all these three things. Hope I have clarified your question, J. And when I take one problem, you will get a clarity. There is one question from Ambika. Is bill of entry is also required to file for clearance? Answer is a big yes, Ambika, where when I have to get the goods cleared from customs area, until and unless I file my bill of entry, I cannot get the goods cleared. Now, continuation of your question, Ambika. Sir, I don't want to get the goods into my factory. I want to retain in customs area. If I want to get into bonded warehouse, should I need to file bill of entry? Answer is no. My bill of entry is filed only when the goods are picked up. From the customs area for my personal consumption or to be used in my factory. Then I file my bill of entry. So what if I want to keep in my bonded warehouse? Don't file your bill of entry. You request under the customs law to take it to your bonded warehouse. So that is the answer to your question, Ambika. Sumit has another question. What does it mean, innocent entry of vessel in case of import of goods, whether it would be considered as import of goods? Innocent entry of vessel. Ignorance of law cannot be condoned under any court of law, Sumit. Any vessel which comes into the territorial waters, it has the purview of customary provisions of my customs law to be complied. Innocent entry, I cannot plead that it is a wrong entry. I cannot take a shelter, Sumit. That is the answer to your question. There's one question from Raksha. Goods taken out from SEZ to DTA by same assessment can be considered as goods taken out. Yes, goods taken out of SEZ, it is equivalent to my customs provisions, Sri Raksha. Your question is correct. And Jay has confirmed that his question is clarified. Good. I'll continue further with our discussion. Friends, I recommend to make a note of each example what we are discussing along with this particular important key terms. Examination, when you look into your institute material, no need to read further. Look into those technical terms, go for your exam. Now, one case law, Garden Silk Mills, which is explained this particular term called importance of filing of bill of entry. Officer cannot say in the example of 31st December 2019, 2nd Jan 2020, where the officer cannot take a leeway advantage to his whims and fancies. Next. Goods cleared for warehousing. Now, this is another conceptual question everyone has to keep in mind. When goods are cleared for warehousing, in case of warehouse goods, customs barrier would be crossed when they are sought to be taken off customs and brought to the mass of goods into the country. That means to say, That means to say, taken out and brought to the mass of the country. That means to say, so when I take from customs area to a bonded warehouse, can you call that it as the import have stopped? Is the levy getting triggered? My answer to that question is levy does not get attracted when it is there in my customs warehouse. The levy gets triggered only from the customs warehouse I bring into the mass of the goods in the country. So what is the technical term called? Brought to the mass of the goods in the country. In simple terms, when one question, Sri Raksha, I believe she asked about SEZ question. I'll put the answer this way. The goods which get in, like when you go to SEZ unit, when you go to a free trade zone, when you go to a STP unit, maybe if you have looked into any of your clients, I fill a form and I give a declaration. These are the list of the goods. When I enter into SEZ with my laptop, when I go for audit, it takes the position into SEZ. When I come out of SEZ, the mass of the goods is coming out of the purview jurisdiction of SEZ to the domestic tariff area, domestic country. As good as the language was used, the mass of the goods, it is season. The border stops in this locality where you come out, you're coming into the territory, the locality, the geography or the mass of goods in the country. So that is how they are indicating that when you have filed, when you have kept the goods in warehouse, the day when you have filed your application to take those goods out of your bonded warehouse, that shall be your triggering point of levy. So friends, this is your answer for charging section in case of my bonded warehouse. Next question, export of goods. So in relation to export goods, when is my triggering point of levy? Export of goods, my triggering point is export of goods is completed when they cross the territorial waters of India. So till it crosses my territorial waters of India, it is deemed to be in the process of export. So I'll levy my taxable charging session comes only when the goods have crossed territorial waters of India. Technical terms, the moment I file my shipping bill, again, one question was asked from one of our friend called shipping bill. So when I'm exporting the goods out of India, when I present my goods called shipping bill and the goods are taken for export purpose where entire container was stuffed. There is a technical term called stuffing, stuffing. When I dump my goods into a container, seal with a key of a customs officer, it is deemed that it has been handed over to the customs authorities where it started its export. Bill of entry shall be, not bill of entry, shipping bill shall be prepared. So when it crosses territorial waters of India, my charging section says that your levy gets triggered. So friends, home consumption was clearances for warehouse. Home consumption means goods become mass of the goods in the country. Duty is paid, like in case of a home consumption. In case of a home consumption, my duty is paid before such clearance. My bill of entry has to be filed for taking such permission. So what I'm trying to say, until the goods come to the mass of the country, it is not called as a home consumption. Again, when you call home consumption, technical question may come. Sir, I recollect that there is a Chhatrapati Shivaji airport. When I go to the airport, there is something called customs bonded place. When I move the goods from Chhatrapati Shivaji Stadium, from the bonded warehouse, from the customs area, 40 kilometers away is my factory. Do you mean to say only when the goods come into my factory, it becomes part of mass of the country? I would say the moment the goods cross the customs area, it gets into the mass of the country. That takes the mass of the goods in the country, means it is coming out of my customs area. The moment the goods have crossed the territorial jurisdiction of this Chhatrapati Shivaji's customs area, it is deemed that it is taking the mass of the goods into the country. When should I pay the duty? I should pay the duty before the clearance. Sir, I'll take the goods out, then I'll pay the duty. No. You file your bill of entry, you do pay the duty, get the approval, then get on the basis of bill of entry, you take the goods out of the customs area. What is meant by warehouse? My goods are immediately after clearance doesn't become mass. Now, this is a case, I was talking example of your trading 10 by 20 office where crores of business done in that 10 by 20 where he doesn't have a own godown, he doesn't have any other place of business. He will have the goods in customs area called bonded warehouse. The goods immediately after clearance. What do you mean by clearance? Sir, the ship has come, the shipper has brought the goods. Now, where should I keep the goods? Once it has, from shipper, it got cleared to the local assessing authorities' hands. From there, I don't bring into the local domestic area. Rather, I take into a bonded warehouse. That is called a permitted place. That is called a permitted place called bonded warehouse. Public warehouse, private warehouse. Now, this is one concept, a warehouse, which is a booming concept, which has got enormous weightage in terms of your tax planning, especially those companies where acute shortage of space, acute shortage of working capital is there, trading business is done. This is one concept where you can read in depth to have the benefit arisen. Next, when I use this warehouse, I being an importer, I have to pay something called interest. I have to pay the charges of renting charges and also the maintenance charges of the warehouse. So for using that warehouse, I have to pay these charges. Next. Now, this till now, whatever we have read is on my charging section called section 12. So section 12, subsection 1, it gives how duty has to be determined, what is the rate I have to identify, looking into various acts. Then based on my section 14, today we are not going to cover section 14, I'll determine the value, then I'll apply or calculate something called duties of taxes. There is no differentiation between government goods and non-government goods. And when should I pay the tax? When the levy gets attracted. When I file my bill of entry, that is the point in time my levy gets attracted. So friends, before we go to this section 20, I would recommend all of you to come into the Excel file. Please open Excel file. There is problem A. Hope you are able to see my Excel file. Open all, if possible, open this Excel file and read through along with me. Bill of entry has been filed. Let me read my first question. Hope Excel file is visible. Bill of entry has been presented on 1st December 20 for clearance to home consumption when the customs rate is 12%. Goods entered into territorial waters on 30th November. Goods entered into territorial waters on 30th November. At that point in time, rate of goods is 18%. Examine the GST pay. Sorry, it should not be GST. Please correct it. Examine the duties of custom payable by the assessee. So friends, 30th November 20, my rate of tax is 18%. And when did I file my bill of entry? This is entry to customs. I'll say territorial waters. Then, when did I file my bill of entry? I'll say BOE. My abbreviation for bill of entry is BOE. My BOE is filed on 1st December 20, where that point in time, my rate of tax is 12%. So, what we will say, we draw attention of section 12. Section 12, subsection 1, where we say, my levy gets attracted when goods take the mass of the country. That is, after clearance from customs by filing bill of entry, levy gets triggered. So conclusion, friends, I would say conclusion is my duties rate applicable is 12%. This is my answer for question number 1. So here, entry to territorial waters happened on 30th November. My journey of import continues until I file my bill of entry. On the date when I file my bill of entry, 12% is the rate of tax. As per section 12, I know that my levy gets triggered on the day when I get the goods into the domestic area, that is the mass of goods come into the country by virtue of filing of a bill of entry, which is my permission to get. On the date when I have filed my bill of entry, rate of tax is 12. So my answer would be 12%. This is answer to your first question. So friends, isn't it so simple? Examination 3 to 4 marks is a weightage for this particular question. So don't miss any of these questions. Mrs. PPC Limited has imported consignment worth 250 lakhs on 30th November 20. So on 30th November, goods have been imported. Customs duty rate on that date is 5%. 5% is my customs duty rate. The above goods have been warehoused and cleared after 6 months, that is during May 2020. So during May 20, this gentleman has filed his bill of entry. So when he has filed his bill of entry, during applicable rate of duty during that period is 12%. Mrs. PPC Limited have made a self-assessment for paying duty at the rate of 5%, considering the period during which the above material has been imported or has been completed. Examine the correctness. Now, self-assessment. When we read the definition of assessment, there we have understood this term called self-assessment. So this gentleman, like this entity called Mrs. PPC Limited, they have assessed the tax at 5%. They have assessed the tax at 5%. Why? Actual import took place during that period time. But now, what we have to keep in mind, my section 12, which talks about levy, the date when you file your bill of entry, the rate what is prevalent, that shall be the tax which I have to pay. So answer for this question is, because my bill of entry has been filed on during May 20, on that particular month, my rate of tax happens to be 12. I cannot plead that goods are delivered or goods are reached in the month of November where 5% is the tax. Answer is the big no. The day when I file a permission to clear for home consumption, on that date I crystallize my rate of tax. So friends, answer for example A, question number 2 is 12%. So I'll stop this example here. We'll come back to our discussion. And then we'll come back to a couple of other examples which I have said. Now, we'll come back to our section 20. Section 20, I'll run through quickly because it has got little various provisions. I'll run through quickly. Pre-importation of goods. If goods are imported into India after exportation, such goods shall be liability duty. And okay. Now here, this particular section 20 says, look, you have re-imported means you have exported after some point in time, the goods have come back. Now section 20 says, look, when you have exported the goods, you could have paid export duty, you could not have paid export duty. Now when you are importing such goods, I'll presume that these goods as if it was imported afresh by any other person. So that means my levy under section 12, gets attracted by for these particular goods. There's one notification called 45 of 2017, which is very important. Second model of example in your examination is set in the backdrop of this particular section 20, where goods exported and later imported, though you have treated at par, there is a benefit of exemption notification. That means to say, I levy a duty which is at a concessional rate. Now what they're saying, look, you have exported the goods and you are re-importing that goods. Why? For repairs or exports under duty drawback. Now I exported the goods and the goods have come back for repairs. When you have exported, it has come back for repairs. There is a defect, malfunction, or any other reason. I have re-exported, re-imported. Again, those goods are going to go back after the work. So let's read once again. Concessional duty is payable in case of re-importation of goods exported for repairs or exported under duty drawback. Now here, there are a couple of things which are joined together in this particular section 20. Just follow me carefully. Forget all your understanding and just go with me. Sir, I'm an exporter. I'm exporting the goods out of India. I'm exporting my goods out of India. So what they're saying, look, because you're re-importing those goods, why I'll do a repair activity and I'll send it back. I'll do a repair activity and I'll send back. Those particular goods, I'll treat at par with regular goods. Sir, isn't it injustice? I'm importing the goods for a repair. Sir, what you will do? After repair, I'll send it back. Okay, I'll go with you. Then I'll do one thing. I'll give you a concession. I'll give you a exemption. What? I'll collect only that portion of benefit what you have enjoyed when you have originally exported. I'll give a clarity this way. I'm a manufacturer in the state of Chennai, Tamil Nadu. In the state of Tamil Nadu, I have a factory in Chennai. I have exported the goods out of India. When I have exported the goods out of India, just keep in mind, write down in your working note, duty drawback. First thing, duty drawback. Second thing, IGST paid on export. IGST paid on export. Third, non-payment of IGST under bond. Third, non-payment of IGST under bond. So friends, this is nothing but when I have exported, Government of India gives me an incentive called duty drawback. Generally varies from 2% to 5%. Why do I get? They try to compensate the local taxes which you have incurred on those goods, which gets compensated by way of duty drawback. Second, under GST law, my section 54 refund, when you have read with rule 89. When I export the goods with payment of IGST, I get that refund into my bank account. Or alternatively, I can apply for LUT or bond where I export without payment of tax. Now the government says, look, when you have exported, you have claimed it. when you have exported, I gave you an incentive of 2% called duty drawback. You filed a refund application. Whatever GST you have paid, you got a refund. Kindly give it back because you are re-importing. This is what your first provision talks about. So, recollecting, what is the description of the goods? What is the import duty I have to pay? In case of goods exported under claim for drawback or refund of IGST or under bond, what is the duty I have to pay when I have imported? Why I am importing? Sir, I'll do repair and I'll send it back. So when I have imported, I have to pay it back to the Government of India called amount of incentive availed. So friends, whenever I have exported, whatever incentive I have enjoyed, because the goods have not materialized, the goods have not been actually sold, it has come back. Whatever incentive I have given to you, I'm going to take it back by way of my import duty. So in this case, friends, my import duty, let me put a different color. In this case, my import duty is nothing but the incentive which I have availed. Whatever incentive I have taken at the time of export, that is collected. So this is your section 20, re-importation of goods. Second point, very, very important. I'll give an example before we go to this particular point number 2. First point I said goods exported, re-imported, because we understood various provisions. Now, second point, any other goods which I have exported have been re-imported. Now, sir, I have purchased a machinery from Japan. After getting the machinery into India, I have put for installation. In the process of installation, there was a malfunction in an air compressor. What I have done, I have sent back that part called air compressor to Japan. That supplier has rectified that malfunction and he has sent back. Now that is called your point number 2. When I have exported, there was an intention to get it back. So what they are saying, when I have imported the machinery, at that point in time I have paid duty. Again, that particular machinery, not machinery, only a part called air compressor. I've sent that air compressor to get replaced. So when that air compressor is coming back, again, if the government wants to levy duty, isn't it a burden on the importer? Because originally when he has imported, already has paid the duty. That is what they are covering here, where any goods which are not covered under one. Technically, for point number one, you can say manufactured goods which are exported. Point number two, any event other than manufactured goods. So in this particular case, if I've imported those goods, what is my amount of duty? My duty of customs would be leviable on the value of re-imported goods after repairs. So first thing, after repair were made up, after repairs were made up, of the fair cost of repair carried out, including cost of materials used in repairs, whether such cost actually incurred or not, whether actually that cost was paid or not, plus insurance and freight both ways. So friends, keep in mind what they're saying. One, repair cost. Two, cost of repair cost. Two, cost of materials. My cost of materials. Then three, my freight and insurance. Whatever I have paid for to and fro. They're saying that all this particular thing shall be considered for purpose of my customs duty. So friends, all other cases which is in your point number two, I'll take my repairs, I'll take my cost of material, I'll take my freight or duty. Now look at the term. Today actually pay or even incurred notionally. Incurred or not, whether or not you are paid, the notional cost of repair, the notional cost of materials used, and the cost of insurance and freight, both the ways. These three things to be considered for the purpose of my section 20. There's one problem, don't worry, I'll take this particular problem. Let me see quickly if there are any questions till now, then I'll come back to further discussion. Friends, I think list of questions are coming more. Okay, no worries, I'll clarify to the extent possible. There's one question from Ambika. Bill of it is also required to file for clearance. Answer is yes. Sumit says, what does it mean? And innocent, I have discussed that. T Raksha, I have discussed. J is okay. Then this question from J Srivasa. If duty applicable when goods are at customs warehouse and exported from there only without bill of entry. Let me read once again. Is duty applicable when goods are at customs warehouse and exported from there only? Okay. J says, sir, I have brought into customs warehouse. From there I have exported. Should I pay the duty? Answer is no, J. Only when I have cleared for a domestic, then I have to pay. Otherwise, no. It is as good as your SEZ or your EOU. This is the backdrop of your tax planning, J. You have got the code rightly understood. Once you get into your practical world, you definitely can see these kind of scenarios. Sumit has one question. I have deposited goods in warehouse instead of being cleared to home consumption and clear later time when importer is liable to interest, rent and charges, as you have said earlier, whether the government or any other amount charged in addition to interest, rent. Okay, it is only those bonded warehouse people who collect that your rent, warehouse charges and the interest is collected by the government. This is collected by the bonded warehouse authorities. Next is your Ambika. Again, Sumit, to answer further, this bonded warehouse is operated by a public and private people, where majority of those things are governed by your government. Ambika has a question. Goods re-imported after export for repairs is again exported. I have not traveled, Ambika. There is a slide. I'll come to that slide, Ambika. Where goods are imported after export for repairs, again exported, what will be the impact? I'll cover that particular Ambika. Now, it is becoming a little complicated when we travel in section 20. Let's also see one example. Don't worry on that. Conditions to be satisfied. Now, just keep in mind, again, friends, this provision when I am talking to you may not be relevant from examination point of view. Once you get into the practice, once you get into the industry, Different scenario where goods have come, goods have to go, again goods have come. You need to know the basic formalities of the customs. That is why these provisions are important. Now, conditions to be kept in mind for the above exemption. Time limit for re-importation. The goods which have exported should have been re-imported within a period of 3 years. So if I have sold the goods in the year 2017, within 3 years, the goods should have been re-imported, provided there is an extension up to 5 years with a special approval. Again, goods should be same goods. Exported and re-imported must be same. This is point where section 74 and section 75 Customs Act, where other sessions are there, you will have majority of the time complications to satisfy. Same goods, identity, retention of the identity of the goods which have exported, which have come back. This is to be proven to the satisfaction of the AC or DC consent. There is no change in ownership in case of serial number 2. Ownership of the goods should also not have changed. The goods which have imported, which have been re-imported, goods have been exported and re-imported, where they're saying that no change in the ownership. What they say, when I have exported, I am the owner. When the goods have re-imported, I should not change my ownership. So what if I am a dealer? What if I am a sole agent? When I have imported the goods, it are in damaged condition. I have exported to the parent company. By the time when it has come back, I have filed something called, I have transferred the goods by executing something called high sea sale. When I say high sea sale, before it reaches the customs border, I have transferred the ownership of the goods. So in case of high sea sales or any subsequent change in ownership, this benefit of reduced customs duty exemption is no more applicable. That is what this says. Now, this is what it says. Goods exported from 100% EOU or FTZ. This is a different provision altogether. We will deal separately for these particular provisions. Next, point number two. Exemption to re-import of goods and parts thereof for repair, reconditioning, reprocessing, remaking or similar process. Now, there is an exemption. Why? Re-import of the goods. Why? Goods are parts. Why? For repair, reconditioning, reprocessing, remaking or similar process. Now friends, keep in mind, sir, I have sold the goods. If you look at the point number 1, I have sold the goods. My own goods are coming back. Do you want me to pay the duty? No, don't pay the duty. Whatever benefit you have enjoyed, you pay. That is good enough. Second scenario, sir, I have imported the goods which I have exported. Now that goods have come back. The notional value of the repair I am considering for valuation. Now here, re-import of goods means I have exported, again import is happening by for repair, reconditioning, reprocessing, remaking or other process. Now there they say description of the goods exported. Description of the goods exported. Now Ambika, your question what you have asked is getting covered in this slide, Ambika, where my goods manufactured in India and re-imported for repairs of goods and conditioning, whatever reconditioning. Then what is the time limit? What is the time limit where I don't want to pay any duty on that as similar to other goods? They say, look, within 3 years, you have to send back those goods. If the goods are to a customer in Nepal, then the time limit given is 10 years. Why 10 years? Why 3 years? Policy decision. We cannot argue on that. So in simple terms, when you have imported the goods for what? This repair and reconditioning other than specified goods, 3 years is a time limit. Then what are the goods? What if goods are manufactured in India are re-imported? Why? For reprocessing, refining, remaking. Then my time limit set is 1 year. So friends, just keep in mind when the goods are imported for re-export, if the goods are manufactured in India and imported, now there's a reference called manufactured in India. Manufactured in India. Re-imported for repair. This is only for repair. Here reprocessing, refining, remaking. Now the thin line of difference is this is minor. Repair is minor. Repair is minor. A small activity. These three activities are major activities. When I undertake on these goods, I do a bigger activity, reprocessing, refining, remaking. In this case, I have been given period of 1 year. Just keep in mind section 20, the time limit for resending back of the material. Further, goods should be re-exported within 6 months of the date of re-importation. Goods must be re-exported within 6 months, extendable till 1 year. ACDC of customs is satisfied. Now here it says that if I don't do any activity, repair, reconditioning, etc., within 6 months you send back. If you're going to do a repair activity, you have standard time of 3 years, 1 year. I'm not going to do, then re-export within 6 months because you have enjoyed a benefit of customs duty. Now this point number 2, where customs ACDC should be satisfied. Now this is where my identity or establishing that similar goods. This is very important practically, where we need to satisfy the goods what I've received. I've sent back the same goods. The importer at the time of importation executes a bond. Why? In case if I fail to perform with any of those conditions, then I have to execute something called a bond. So friends, quickly I'll come back to Excel file. I'll come back to an Excel file where a couple of problems are set in this backdrop, section 20. Paucity of time, I'll take one example. And I'll go further. I'll leave the other problems for your practice. PPC Limited have imported tools worth 12 lakhs from Germany during November. I'll take as 2019. Value 12 lakhs. Post-importation tools have deficiency in performance and such tools were sent back during January. So January, say Jan 20, I have sent the goods for export or repair. So for testing and replacement. Assuming that supplier has replaced the defective tools with new tools. So here new tools have come. Then benefit under section 20 not exist because same goods should come back. If different tools are coming, whatever duty is applicable, the duty has to be paid. So because here new tools are coming, my section 20 does not come into picture. Because the law says there should be a identical similar goods. Now here, J, for your question which you have asked half an hour back, look at the answer. AZ Pistons have imported machinery worth 250 lakhs. Machinery value 250 lakhs. From USA during March, I'll say March 20. Due to performance issue during June 20, the goods were sent back for rectification and received back in July 20. July 20 received back. Supplier has not charged any amount for the refurbishment undertaken. Notional value of space, space replaced worth 12 lakhs and expenses incurred in freight and insurance were 5 lakhs. Okay, so here they're saying that for the purpose of my section 20 lakhs will be the notional value for the purpose of calculation of duty. So here my notional value for the purpose of section 20 is 20 lakhs. On 20 lakhs, my basic customs duty. On the date, my basic customs duty is 12%. So what I will do, I'll calculate my basic customs duty at the rate of 12%. I call this as A. So my duty of 12%, this into 12% is my 2,40,000. Social welfare cess. Now, this particular element, I would like to draw your attention where whenever we are paying taxes, just keep in mind that these taxes what I'm paying is consisting of my customs duties of customs. This is also consisting of my central excise. This is also consisting of my GST law. Now, I again draw attention of your basic understanding called duties of taxes. Based on my duties of taxes, all those particular taxes I have to keep in mind when I do the computation of these particular taxes. So, My basic duty, I'll be computing called your duties of customs duty. On this customs duty, there is something called a cess which is applicable, which is under my customs law. Now, why do I levy cess? Why these taxes are levied? Answer to this question is, when I look into the policy decision, there are various levies which comes into picture, like anti-dumping duty or compensation cess, just to sum up or burden the particular valuation to make the price competitive. So for that purpose, I levy this particular duty. So when I'm doing the valuation, I have to add something called this social welfare cess, which is calculated on my basic cess. So friends, here my welfare cess is calculated 10% on A. So 10% of 2,40,000 becomes 24,000. Again, sir, why you are doing this method of calculation? Because these are all integral part of my duties of taxes. My social welfare cess, which is part of my customs levy. So on the basic customs duty, I am going to levy this particular component. On the customs duty, I am going to levy this particular component. Now, once I have levied this particular thing, my assessable value for IGST shall be this amount. My IGST in the given problem is 18%. So 18% of customs duty I levy on this. This I call as B. This I call as C. So my total duty payable under section 20 shall be A plus B plus C. So this is your answer under section 20, where I take a notional value, I take my social welfare such as 10%. So the examination, will they give or should I need to calculate? There is a session called valuation and other things where you will get the basic components of customs duty. There you will get the answer. So examination, it is expected that computation of basic duty on that social welfare charge. This is derived the assessable value on that again levy of IGST. So examination, I have to solve this particular problem in this particular fashion. So there is no particular escape from ignoring that social welfare cess. Next, section 21. This is a small topic. A theory question of 3 marks can be expected. Derelict, wreck, jetsam, flotsam. This is just a theory question. Even inter you could have studied. Quickly, I'll run through these particular terms. Derelict. This refers to any cargo vessel which is abandoned in the sea, where there is a loss of fire or etc. Like example, COVID time, there was one occasion where entire passengers in the ship were affected by COVID, where they were abandoned to come into a particular nation. That is the point in time where we call as a derelict. Jetsam, when there is a weight of the goods which have increased, I throw some goods out of the vessel, which is called jetsam. The flotsam, when I have done a jetsam, that means I have thrown the goods. Those goods which is jettisoned, those goods which continue floating in the sea is called flotsam. Wreck, a ship or cargo or a vessel which is broken and which gets floated and passes to the tides by virtue of tides which reaches the what we call seashore, that's called wreck. So this is one theory question for 3 marks you can expect, which is from your intermediate. Next, this is one set of rules which is called import of goods at concessional rate of duty. This I'll explain the concept of this particular import of goods at concessional rate of duty. Small chapter. Examination, I don't see a reason a problems can be asked, but this is one concept which is set in the backdrop of your procedural aspects in my customs law. So this particular import of goods at concessional rate of duty, I'll give you the backdrop. Section 25 has got this particular mechanism where various rules have been formulated. Now here, This rule is applicable in two cases. This rule is applicable in two cases. Just go with my flow. Forget the English what is there on the slide, which is there for you to read also. When I do a manufacturing activity of a particular commodity, or when I use it for provision of output service, there they want to give a benefit of a exemption notification. They want to give a benefit of exemption notification. Now, benefit of exemption notification, complete waiver or concessional waiver. Complete 100% waiver or a portion of waiver. This is what happens, a portion happens in my exemption notification. Here, this particular rule says they have formulated various rules and they have issued notifications. When you go through the notification, they say, I'll give you a benefit of this exemption notification for two occasions. Those goods which you have imported, you have to use them in a manufacturing process of a particular commodity. Only in that particular case, I'll give you a benefit. Second, you should use that for provision of output service. I'll give you an example. Sir, I'm a research-oriented organization. I'm a Section 25 company where central government has funded in my research-oriented organization. There are various research-oriented organizations where you have this Section 25 benefit, where I import the material, and this research-oriented organization, it is all under the supervision of central government. My goods which I manufactured, I use those goods only in DRDO. I use those goods only in DRDO for defense activity. Now look, I'm giving you an exemption notification. Why? Because you promise that you want to use it for a particular manufacturing activity. That particular commodity is used by DRDO. Then I'll give you a benefit. So first thing, when you use it in a manufacturing activity. Second, provision of output service. I'll give you an example. Say I'm an agency, I'm a security agency, which is a top class agency, a Z class, where they wanted to give us specific services in the scenario of COVID pandemic. I want to import a machinery. That particular machinery I want to use for detection of COVID patients or infected area. Provision of output service. What will I do with that particular goods? I use it for checking whether there is an area which is infected by COVID. Now that is called provision of service. So this particular section 25 read with provision of rule says that only in these two cases I'll give you a benefit of exemption notification. Now there are definitions. I'll skip these definitions for a want of time. Information about, Now, how does it happen? Information. A person who is importing these goods, what he has to do? He has to give the nature of goods. What is the background of me? I am an importer, I am a manufacturer, or I am into providing services. If I'm an importer, I have to write a letter to my jurisdictional DC or AC saying that, look, these are the list of goods I want. Why? This is my manufacturing activity. Look here. I'm going to explain in detail to the respective AC or DC of customs saying that I'm a manufacturer. I want to import these goods. I'll give you the BOQ. I use these goods in this manufacturing process. This process is for so and so particular facility. This, can you use it for any other customer? I would say no. It is only for DRDO. In their presence, I do this activity. Post this activity, I dismantle so that it cannot be used for any other particular general activity. So when I set all these things, then I'll get an approval from my range AC DC. So what I have to do procedurally, I have to write a letter to my jurisdiction AC or DC in two sets. One set I have to give to the customs authority. So along with this, I'll give you a bond to my jurisdictional office. Why? I have to comply with those permissions. For that purpose, I'll give you a security bond. Now, if I fail to comply with any of those things, that bond can be invoked along with my interest. Now, why I'm giving that bond? Whatever duty I have to pay, I'm getting a waiver of that particular duty. This particular waiver is invoked in case if I fail any of those particular procedural aspects. Now, once the jurisdictional AC/DC satisfies that I'm a genuine manufacturer, those goods are relevant for this particular process, then this officer will forward to the custom station AC or DC saying that please permit that fellow. On receipt of that letter, I'll be permitted to get the goods imported without payment of any duty. This is what we need to understand. Next. Procedurally, what I have to do, once I receive the goods, within 2 working days, I have to inform back to the range officer that, look, I have received the bag. Having said that, I have to ensure that goods which have come are in good quantity and good quality. Maintenance of record for quantity and value of goods, bill of entry wise. Now here what they say, because I have given you a benefit of customs duty not to pay, you maintain a registers. All those goods list bill of quantity, bill of entry wise maintain the quantity. Whenever I come for inspection, whenever I call for records, you should be in a position to provide those documents. And also you provide a simple return on a quarterly basis by 10th of subsequent quarter, list of those goods which are received, which are consumed, which are not consumed. That is what expected. Next, re-export of clearance or clearance of unutilized or defective goods. Now the law says, look, I have given you benefit of import without payment of duty. What if the goods tend to be defective or malfunction? Within 6 months, you are supposed to send back those goods with the prior approval of AC/DC. If not, you want to dispose. The cost of freight and other things are higher. The player doesn't want those goods. You can dispose of those goods with the prior officer permission of this AC/DC, where whatever relevant bond is there, it will be cancelled. I will pay the duty along with the interest from the date till the date of disposal. Next. Next. Now, this is again a procedure. Look, you declared that this is a process. You said that this will be consumed. What if I have not used the goods? What if the process itself did not take place? What if I have sold some of the items as a scrap? Then I have to invoke the bond, the AC or DC. Like 2 things are there. I have to use in the process or I have to send back the defective material. I have not used in my business manufacturing process, nor there are defective goods which I have not exported back. Then the concerned AC or DC, what he can do, he can invoke the bond, he can encash the bond for recovery of the tax along with the interest. This is what happens in case of my rules. Now, this is in relation to section 25, right, with my rules. Next. Section 15, date of determination of rate of duty and transaction value. Whatever we have discussed with respect to section 12, continuation of that in section 15. My goods enter for home consumption. The day when I file my bill of entry or date of entry inwards into the vessel or arrival, whichever is later, shall be the date on which my section 12 gets attracted. Friends, refer to section 12 where I have to pay my duty. Example, what I have given to you, example A. For that third problem, answer is covered over here. Want of time, I'm skipping the problem. You can solve that problem referring to this slide. So when I have to file my bill of entry, my section 12 gets triggered. Date of filing of bill of entry or entry of the vessel, whichever is later. This is important, not earlier. This is my, in case of filing of bill of entry. Goods for home consumption. Date on which bill of entry for home consumption in respect of such goods is presented, then my section 12 gets attracted. Any other goods, then date of payment of duty. This is simple section under section 15. Now, section 13, as I said earlier, when we talk about Rama, Sita, Hanuman, Lakshman, like your Sita has come here. Section 13. Duty on pilfered goods. Now I'll explain the provision in simple terms, saying that I'll give an example. Most of the time when food items are imported, there will be some sort of theft or missing of the products. I'll give an example. Soft drinks imported or food items imported, ready to eat, MTR or Haldiram's product. When you have say big pack, 1 or 2 packets are missing, seal is broken, people in the ship, they will open, take and consume. Now that is called pilferage. Section 13 says that if any goods are pilfered after the unloading, Now after the unloading, goods have been loaded. Haldiram's packet has come for 100 units. Unloading happened. Thereof, and if any imported goods are pilfered after the unloading thereof and before the proper officer has made an order. Before proper officer made an order. Now what is happening? 100 packets of Haldiram has come. When it got unloaded, 100 packets are there. The order, appraiser is making an order. When he has, before making order, he saw 98 packets are there. So what will happen? First question, I don't remember the name of the student. He raised, sir, equity. What do you mean by equity? That point of equity is covered here. I go on the principles of equity because you have imported 100, I'll collect duty on 100. But because there is a pilferage, 2 units are missing. On the grounds of equity, I'll apply my levy of duty only on 98 packets. So here the duty is collected only on 98 packets. For home consumption on deposit in a warehouse, the importer shall not be liable. Importer shall not be liable to pay duty on such goods unless such goods are restored. So friends, just keep in mind when we talk about section 13, when I have imported my Haldiram's packet, 100 packets are there. Unloading 1, 2, 3, 100 packets are there. Before appraising, like the fellow who is passing an order, he counts 1, 2, 3 and he notes. Then 2 packets are missing. My section 13 comes into picture where my section 12, by virtue of section 12, this point comes and says, because there are 2 goods pilfered, I'll not ask you to pay duty on those 2 goods on the basis of equity. This is your pilferage. Now, if the goods are restored back, what if I could find those 2 packets? Sir, those 2 packets are open. Those people have consumed Haldiram mixture. There is nothing left in the packet. What will I do with the empty packet? If the 2 packets are in good condition, I'll be liable to pay. If the packets are not traceable because of pilferage, I don't pay any duty on that. This is my section 13, which deals with your pilferage. Section 13, which deals with your pilferage. I'll quickly run through these points. Circumstances relevant pilferage. There should be evidence with tampering of packages. Now, like Haldiram's, I was saying 1, 2, 3, 4. There is a seal broken. That is a evidence that there is a tampering. There should be a blank space. That means stacking 1, 2, 3, 4. When I look into the Haldiram, when I open the dabba, 100, 1, 2, 3, 4, I can see a gap that 2 packets have been lifted. That is called missing articles. Then the missing article should be unit articles, not a part article. Like entire particle unit itself is missing. Pilferage not at the time of removal. Pilferage noted at the time of removal. Now, when I have noted, there were 100 quantity. When I was doing the assessment, this is missing. Normally noticed by the customs authorities at the time of inspection. So when I do the inspection, I could note that. At times, I could notice after the removal. Importer has to ask. Now again, keep in mind, importer always has to ask surveyor, either by the steamer agent or insurance surveyor, to do this particular inspection, for the goods which are available or not. So what if duty already has been ascertained or paid? What is the remedy for me? I can seek for a remission under section 23. When we come to section 23, you will understand that. Now, section 23, I was talking about section 12. Now, Rama has come, Sita has come, now Hanuman is coming. Section 23, remission of duty on lost, destroyed or abandoned goods. Look at the term. Lost, destroyed or abandoned goods. Now, this is one example. In the earlier discussion, I've set one example on this particular backdrop. Now, I'll explain again the backdrop of this particular provision where it says that any goods which have been lost or destroyed. Look at the term. Any goods which have been lost or destroyed at any time before clearance for home consumption. The AC or DC shall remit the duty. Remit means it is as good as I will waive off the right to collect the duty, and whatever duty you have paid, I'll give it back to you. I'll give it back to you. Why? The goods have been lost or the goods have been destroyed. Without prejudice to section 13, where it is shown, section 13 deals with your pilferage, where it is shown to the satisfaction of AC or DC that any imported goods have been lost. LOST, write down in your notebook, lost. Goods have been destroyed. Goods have been destroyed. Means completely gone. Hold on and remember carefully. There is a term called damaged. My destroyed is different, damaged is different. Destroyed, completely destroyed. Fire accident, natural hurricane, natural tsunami, that's called destroyed. Damaged, probably packets got opened, the seal got opened, that's called damaged. My damage is different, destroyed is different. Only in case of loss or destroyed, section 23 is applicable. Examination, damn sure. If any question is asked, this is one pet area for the examiner. Then damaged, destroyed. Section 23 gets applied only in case of loss or destroyed. Damaged, my section 23 does not get applied. So in case there is a loss or destroy, what will happen? I'll get a possibility to remit the taxes. That means whatever taxes you have paid, you can get the refund of that particular taxes to the extent of goods lost or destroyed. Where before clearance for home consumption. So before I file my bill of entry, any goods have been lost in the purview of the customs officer, then I can file for section 23. Give an example. In 2005 tsunami, when it occurred in Chennai, I have filed my bill of entry for clearing the goods. But when I actually gone for getting the goods, because of tsunami, entire goods got washed out. Sir, I have paid the customs duty, apply section 23, get back the refund because the goods have been lost in my purview, in my control, in my custody. Before the goods are handed to you, before you get the ownership of the goods, because the goods are lost, whatever taxes you paid, I'll accept your application for remission under section 23. This is your section 23. So this is just a summation of what we have discussed till now. There's one slide where I have brought in the differences between section 13 and section 23. Now, this is one point called relinquishment. If you recollect our examples initially, relinquishment is giving up the ownership. Now, this provision, section 23, says that you are abandoning the goods. You don't want the ownership because of your contract obligation. There was a 3 months delay as per your contract obligation. You have invoked your LD clause and you got the money from your supplier. You doesn't want to take the possession of these goods. You'll write to the customs principal commissioner of the customs saying that, look, I would like to relinquish these goods. It is acceptable by the customs authorities, exceptional cases where they feel that there is a suspicious fraudulent activity. Now, this is one example referring to our last class, Badmash Company movie in Bollywood, where this hero, Shahid Kapoor, he does a relinquishment. The original owner, he relinquishes because when they have imported the shoes, only one pair, instead of one pair, only one shoe has come. So that fellow relinquishes this particular title. That's your section 23. Now, what will happen when relinquishment happen? Ownership goes to the government and they put it for auction and they recover money along with the duty on those goods. Who will get the right? The principal commissioner of customs under section 23. Friends, this is one comparison between my section 23 and section 23. Sorry, section 13 and 23. Pilferage and loss. Pilferage, petty amounts, theft happen. Loss, completely lost. So first point, meaning. When I say pilferage, it is a small units lost. Loss means lost or destroyed, which refers to total loss of the goods, which have gone forever beyond recovery. Duty on the goods. In case of section 13, importer shall not be liable to pay. Under section 23, whatever I have paid, it will be remitted back to the importer. Means I'll get a refund under section 23. Under section 13, upfront, the officer will not recover the passing the order, he got to know that there was no units available. So pilferage, no duty collected. Under 23, the duty shall be remitted back to the importer. Next, subsequent restoration. If the goods are restored back, 2 packets of Haldirams restored back and were given to owner, then the owner has an obligation under section 13. In case of section 23, there is no possibility for restoration. This is what we need to understand. Next, warehoused goods. In case of section 13, it is not applicable because unloaded before appraisal, this have been lost. In case of section 23, only when the goods are warehoused and it was lost, supervision of the Commissioner of Customs, then section 23 is applicable. Onus to prove under section 13, pilferage. I don't have any obligation to prove. Look, you have downloaded, when you have downloaded 100 packets are there, you yourself are doing the assessment. When you have done the assessment, 2 packets are missing. So I being an importer, I don't have an obligation. But under section 23, as an importer, you're keeping the material in a bonded warehouse. The bonded warehouse could be private or public. I have to prove to the AC or DC saying that, look, I did all safety measures. The goods what I have kept, they are not perishable. They are not inflammable. I have taken enough safety measures. There are pictures for those goods, how it has been saved. And the owner of the warehouse has given a certificate that these have been stored properly. I have taken due care of that. When I have given all this, ACDC gives a permission to remit under section 23. In case of section 13, when does it occur? After unloading, before the order. In case of section 23, imported goods must have been lost or destroyed before clearance for home consumption. It has been downloaded, it has been unloaded from the vessel. I have taken it for home consumption. I have kept it in a bonded warehouse. In the bonded warehouse, when some natural disaster happens, that is my time of occurrence for section 23. Next, what is required? I have discussed Sita, I have discussed Hanuman. Now your Lakshman comes here. Along with section 12, Sita, Hanuman, Lakshman. Sita is your section 13. Hanuman is your section 23. Lakshman is your section 22. So this is the third provision which I have to read together for my section 12. Abatement. Now friends, 23, there is a reference to loss or destroy. Please write in your work note section 23 hyphen loss/destroy. Loss/destroy. Below that write down section 22 hyphen abatement hyphen damage. Now I'll explain this provision in very simple terms for you to understand. This particular activity of abatement comes into picture where my goods have been imported. The goods have been imported and which got damaged or have got deteriorated before or during the unloading. Before or during the unloading of the goods. So this occurrence of section 22 comes. This section of application of section 22 comes where my imported goods had been damaged or deteriorated when at any time before or during unloading. Before or during unloading. I'll give an example. There I have imported fish, say from Switzerland. Deterioration. When I have imported fish, there is one gentleman in Tamil Nadu. I don't remember this name of gentleman. I believe it is not TVS Sundaram, some other group where that is the first gentleman during British time. He has imported some food from England using a ice box. Similarly, this example assuming I have imported fish from Switzerland. For importing, I have to protect with ice. If the ice gets melted, and by the time ice gets melted, if the consignment doesn't come, entire my fish gets spoiled. Assuming some reason there was a problem with my this what you call ship, it got broke down and it caused delay of 10 days. By the time it came, majority of the consignments got deteriorated. I don't call damaged, deteriorated, where it is almost all in the position of getting scrapped. Not entire fish can be scrapped. Some portion of the boxes where it got melted, it got exhausted. That's called before or during unloading. I got to know before unloading or during unloading that there was a deterioration. Next is your damaged. Mishandling. During unloading or before unloading, there was a damage happened. So what it says, any imported goods other than warehouse goods, had been damaged at any time after unloading, therefore thereof in India, but before their examination, then what they say, my remission under section 22, abatement under section 22 is possible. Simple terms, what they say, look, there is a damage to the goods, there is a deterioration to the goods before or during the unloading or before warehousing the goods, which is in the process of unloading. Then what I will do, I'll give you a parihara, that is, I'll not burden you. Again, principles of equity. Applying my principles of equity, they say my computation of duty under section 22, how levy will not be 100%. Those that any warehouse goods had been damaged, editing them before clearance. There is an equation. What is that equation? My duty on goods before damage into what is the original duty into value of damaged goods divided by value of goods before damage. So my original duty intact into value of damaged goods divided by value before damage. Sir, 100 rupees is my value before damage. What is after damage or deterioration? So it can fetch only 30 rupees. So what is happening? Proportionately under section 22, I am levying a duty called abatement. This is the principle called abatement. So friends, this is your next principle of your abatement. Now, when it is applicable, goods are damaged or deteriorated. Friends, I have given one example. Depending on the time availability, I'll come back and explain this section 22. In your working note, clearly write down loss or destruction. Then your section 23, remission. Damage or deterioration, section 22, abatement. Now, this happens before or during unloading. By accident after unloading, but before examination for assessment. By accident in warehouse before their actual clearance for consumption. Such accident is not due to willful negligence or default of the importer. Standard clause, whenever the government wants to give the benefit, the person in charge, importer, has to prove that he is not guilty of misconduct. Now, this is the provisions till section 23. So we have read section 12, we have read section 13, we have read section 22, section 23, we have read section 25, where the rules we have read. These are all provisions in relation to your levy. All along what we have discussed is in relation to levy. Now we are moving to section 24, which talks about your denaturing. Before that, let me see if there are any questions raised till now. Ambika has a question. Goods re-imported after export for repairs is again exported. What will be impact? I think we have covered this slide, Ambika, where subsequent re-export, there is a time limit of 3 years and 1 year, and also conditions stipulated. We have discussed that particular aspect. Then there's one question from Geeta. If owner died, then okay, in case of this particular relinquishment, section 23, there was a question from Geeta saying that, so what if the owner has died? Again, now if there is no person who has come forward for claiming this particular relinquishment, then there is again what you call invocation of section 23, where the ownership vests with the commissioner or principal commissioner, where they'll put the auction and recover the duty on that particular goods. Friends, we'll take a quick break of 2 minutes and we will resume back. We will have a break of 2 minutes. Quickly, we will resume back and continue our discussion. With our discussion. Let me see if there are any questions till now on section 13, section 22, section 23. Then we'll come back with our further discussion. The last question asked is by Geeta. After that, there are no further questions. So we'll continue with our discussion on section 24. Done. Now, section 24. This is one provision where when the goods are imported into India, there is a process called denaturing or mutilation of goods. Like the goods which have imported, they have a multiple purpose. The goods which have been imported, example, chemicals which are used in aroma, chemicals which are used for your alcoholic drinks preparation. A chemical, wherever I put that, it takes the shape or position of that particular product. So there are a couple of products which have got a multiple usage. I cannot say that this goods can be used only for this particular purpose. I could have imported the goods for the purpose of preparation aroma. I can have imported the chemical for the purpose of my medicine manufacturing. I can use the same chemical for the purpose of your any other narcotic or any other drugs preparation. So because there is a multiple functionality and each function, my rate of tax is different. Now I cannot go business to business to set a particular process or rate. So in that particular case, I invoke my section 24, where at the request of the importer, this process called denaturing or mutilation. What I will do, those goods, I'll try to take away the original characteristics, or I'll mix some items to mutilate or make impure. The pure one, I'll add some chemicals to mutilate or make a impure activity. This particular process is undertaken under section 24. Currently, there are this particular denaturing of spirit where some chemicals are added at the time of importation to mutilate to a particular process. So this section 24 talks about activity under central government special guidelines where only few items which have been listed will be done a separate process before they are imported for home consumption. This is my section 24. To have a knowledge on this particular section 24, there is a item called ethyl alcohol. Ethyl alcohol, which is not denatured, attracts a higher rate of customs duty, whereas denatured ethyl alcohol attracts lower rate of duty. How do I do that? Imported ethyl alcohol, denaturing happens where bitter chemicals are added to denature the spirit. Now this is one activity in case of a ethyl alcohol. So this is your one of the schedule 4 item under Central Excise Act. So this is particular activity undertaken by section 24. So friends, we'll come to the last leg of our discussion called section 25, the backbone. Section 25, the backbone. I will not say relevant from examination point of view, but entire your career, entire your profession, the provisions what we are going to read under section 25 and a couple of slides further, I would say till your practice is there, you depend on these particular principles for your professional argument purpose. Now, starting with power to grant exemption from duty is covered under section 25. So section 25 says that subsection 1 says general exemption means by virtue of a notification, in the interest of public, I generally give a exemption. So I'll say these goods, there is a exemption. Now that exemption could be either absolute or could be subject to such conditions. Now most of the time I draw attention of the listeners, students as of today who are going to become professional chartered accountants down the line couple of months, I would say read your notifications whether it is a absolute exemption or subject to some conditions. Means a condition notification which talks about an exemption absolutely free means it is commonly applicable for all, or it is a conditional saying that look, this exemption is applicable only if you are located in so and so territory, if you are having investment in plant and machinery up to so much of value, you are having manpower up to so much of value, you are using this particular item or goods in this particular process. So there are conditions laid out, which is a absolute blanket exemption or subject to certain conditions. So whenever you read your income tax or indirect tax, please keep your eyes wide open whether it is a general exemption. Second, if this exemption is a general, then is it an absolute exemption or it is a conditional exemption? Very, very careful with subject to conditions like your income tax. When I want to claim additional depreciation, there are certain conditions. I should have a value of addition. I should use it for a certain period of time. It should have been a new purchase machinery. All those are called subject to such conditions, not an absolute exemption. So this is one point which we need to keep in mind with respect to general exemptions. Section 2, Section 25, subsection 2, special order. What we have read earlier is a general exemption. What we are going to read now is a special exemption. So what is the difference between general and special? Special exemption always comes by way of an order. If you recollect your GST law, there you refer to a special order which comes by virtue of a exemption. Classic example, my financial year 2017-18, my input tax credit I should have taken on or before the due date of filing written for September 2018. That has been extended till March 2019 due date GST 3B. How? By way of a special order. Special exemption. Similarly, a benefit given by virtue of levy of duty could be a general exemption, could be a special exemption. If the central government is satisfied that it is necessary in the public interest so to do, it may by special order. If I say special order, special exemption. In each case, exempt from the payment of duty under circumstances of a exceptional nature stated in such order. Exceptional nature stated in such order. I'll give you a couple of examples. Sir, there is a chemical which is used by pharmaceutical industry. Now, because of COVID pandemic, I have to do R&D like Bharat Biotech. For doing this particular R&D, we need to import this particular machinery. We need to import this particular chemicals. A special order, special exemption, only for those commodities, only for those goods imported for so and so process. I give you a special order, not for a general order. General order means whoever files the bill of entry for that material, they get an exemption. In case of a special exemption, only those goods used for so and so purpose, approved where a certificate is obtained, there I call as a special order, exceptional nature, where in the order they'll say because of these various grounds I give a special exemption. So there is a special authority. This is given by virtue of a special authority, and in detail they'll specify what are the circumstances of exceptional nature why this particular exemption is given. What if, sir, all of a sudden, can the authority under this special exemption can be withdrawn? Answer is definitely yes. Like assuming there was R&D going on for a discovery of a medicine, all of a sudden before someone can identify this particular, like before Bharat Biotech come with the medicine, some other person has come forward saying that this is a medicine for COVID, which was also approved by WHO and other authorities. Then by virtue of that particular exceptional nature, which is no more an exceptional nature, this exemption gets withdrawn. So this is what we need to keep in mind with respect to special procedure. Next, with respect to this section 2A, it says that I can issue an explanation. This is very important. There can be an insertion of an explanation in exemption notification within a period of 1 year, which is inserted to give a clarification. What happens in case if there is any difference of opinion, they can insert an explanation in that particular notification within 1 year from the date of its insertion. That is your 25(2). Then this exemption, when I give you a reduction in rate. At any point in time, I cannot exceed the original rate. That is your subsection 3. Subsection 4, important thing to keep in mind, even when we read the GST law. So when there is a notification, how do I know from which date this notification is applicable? The day when it is issued in the public gazette, it is given for publication in official gazette. That day shall be called as the day from which this exemption notification will prevail. And finally, no duty shall be collected as amount of duty leviable equal to or less than 100 rupees. If there is any quantification of duty, it is equal or less than 100, no customs duty shall be levied. This is what it talks about your section 25. So friends, till now whatever we discussed, that is your examination syllabus from section your topic number 2, levy and exemption of GST. Now there are a couple of slides which I am going to talk to you further in another 5 minutes. This is slides which are picked up from your interpretation of statutes point of view, how we need to read the exemption notification. I'll rush through for want of time, and I'll see if there are any questions till now for answering. Bear with me. Any questions are there, I request you to post in the question window. I'll finish off this and quickly I'll take up your questions. Rationale for grant of exemption. Power to grant exemption, it is vested with central government, subject to overall control of Parliament. It's a policy matter. Any exemption to be given, to be withdrawn, it's a policy matter. No one has a right to question why you have not given or why you have given. Now, how do I give this exemption? Based on goods which reach Indian soil. Why do I give this exemption? I'll refer back to one question which was asked one student. So why there is a principle of equity or principle of mutuality where this exemption is being given? The reasons why I give an exemption, because possibility that goods have not reached Indian soil. Example, section 13 pilferage. Goods have come or in case of your destruction, goods have been destroyed before it reached Indian soil. I'll not recur any tax on that particular goods. Goods have reached Indian soil but are not available for consumption, pilferage. Because it is not available for you, I'm not going to collect any duty. Goods are damaged or deteriorated. Because the goods are damaged, completely lost, I'm not having the authority to collect. It is lost in my custody. So these are the backdrop why exemption notification is given. Discretionary provision, where exemption is usually controlling the economy. Now, when I give a discretionary provision, it is my discretion. Now, if I say, I give you this exemption notification only for those SSC who are having a turnover of 100 crores. Any SSC having any goods imported by an importer whose value is used for manufacturing of the goods turnover more than 100 crores. Discretionary power. It is a policy decision. No one can question in the court of law why you have made a discretionary. It is on the basis of principles of your economy. Again, whenever I give an exemption notification, it is purely in the public interest. It is part and parcel of enactment. Time bound in the notification can be withdrawn. Supervening or public interest or interest overrides promissory estoppel. Very important. Very important. Probably one theory question you can expect. Time bound in a notification. I have given an exemption notification. This notification valid from 1st April to 30th. If I withdraw that particular exemption in between, no one can invoke your promissory estoppel, Article 14, saying that you have promised for 30 days, you have withdrawn on 20th day. This is a policy decision. No one can question the government policy, and this principle says that government has a right to withdraw that particular promise. Now, class of delegated or conditional, again, special or general exemption. Power can be used not only to raise revenue but also to regulate the economy. Classification between big and small manufacturers, it is again discriminatory. Choice of date in exemption notification cannot be questioned, being a decision of policy. When I have given an exemption notification, you cannot question me why you have given at this point, why you have not given 20 days later, 20 days before. All these questions, it's a matter of policy. You don't have a right to question all these aspects. Last and final, public interest means act beneficial to general public. Now, when you get into practice over a period of decade, when you have thorough knowledge on tax matters, this last point, you come in for argument in court of law. When you say in the public interest, the act of that particular public interest should be beneficial. It should not be burdensome. Like example, in the interest of public, I have levied duty on imported mask or imported chemicals. Now I'll say, so when you're levying a duty on chemicals which are used for pharmaceutical industry, which are used by biotech, where is the interest of public? This is one argument which we put forth when we talk about your general exemption. Notification to be read as part of enactment. Exemption notification to be read as ordinary man. Now, when you read a notification, you should read as if an ordinary person is reading it without any ambiguity. You cannot have a technical jargons which are beyond a layman where he cannot interpret the intent of the lawmaker. Intent of the law should be as good as a layman's understanding. Exemption cannot be claimed on the strength of a finance minister budget. Now, finance minister, by mistake, he has overread. Instead of saying rate of duty is 28, he has read as 0. When he is talking about exemption notification, by oversight, he said all motor vehicle commodities are coming under exemption notification. It is overreading. By mistake, there is a spellbound mistake or any sort of unintentional mistake happened. No one can go to court of law saying that finance minister declared in his or her speech, whereby let me enjoy the benefit. You cannot say that. Burden to prove that particular exemption is always on the assessee, that is the claimant. Assessee can opt for the notification which is more beneficial. Assessee can opt for the beneficiation which is always beneficial. So friends, with this, we come to the end of our discussion. And last session and last to last session, couple of requests were made from a couple of students saying that, so please share your mobile number and email ID. For convenience sake, I'm going to share my this particular email ID. You can note down my email ID and you can get back to me in case of any of doubts you have. Let me write down my email ID here so that you can make a note and get back to me. My email ID is praveen@gillaw.in. Hope you are able to see my screen. My email ID is praveen@gillaw.in. praveen@gillaw.in. Now let me see quickly if there are any questions. And before, I have a couple of points to sum up before we wind up. There's one question from Bhavati Sukadaya. When we deposit goods in warehouse, why do we need to make a bond to pay twice the amount of duty assessed by the government? Will the extra duty paid be refunded in time when we clear for home consumption? Fantastic question from Bhavati. See, the question is, when we deposit the goods in warehouse, why should we make a bond? This bond is equivalent to twice the amount of duty assessed by the government. Now the answer is, see, like assuming that I have imported the goods, the value of the goods is 10 lakhs. The duty applicable on such goods is say 1.5 lakhs. When we deposit these goods in the bonded warehouse, instead of 1.5 lakhs, the government asked me to pay a duty of 3 lakhs minimum. Why does it happens that way? So friends, please keep in mind, when I have a goods in bonded warehouse, I'll be permitted to do a value addition on those goods. Using those goods, I can do a manufacture. May not be a big machinery. I can do assembly activity. I can do some value addition whereby the semi-finished goods may become a finished goods. The value of goods which is for 10 lakhs may become 15 lakhs. The value of goods of 10 lakhs may become 20 lakhs. But that was the backdrop why government always insists to have your deposit of duty much higher than this particular basic value of the duty. Friends, there are no questions other than this question what has come. I have shared my email ID for any of your questions to refer at a later point in time. Now, I'll take 1 or 2 minutes of your time to before we wind up. Exams are there, another 1 month in point in time. You have many plan of action. Couple of things keep in mind. Have enough exercise in a day, say at least for 30 minutes of stretches along with your preparation. Have 30 minutes of stretches of your body to keep your health intact. Do little of yoga, breathing exercise considering the pandemic which is going to happen, especially in the examination days when you're going to travel, examination centers, etc. Though you take care of enough practices, good food habits with good exercise. Exercise is one compulsory thing. Second, don't carry any your experience of one examination to another examination. You're in final, though you have crossed your foundation and intermediate, final level. Don't be overexcited. Don't be so deprived looking into your examination. Whatever performance you have given, ignore that. Go afresh to the next examination. Third important aspect. Look at have enough sleep on during your examination days. Don't try to overshoot your sleep. At least 6 hours of sleep, continuous sleep, you have ensure that you are there during your examination days. The last point before we wind up for the day, value addition to the society at large. Friends, very soon you are all going to come with flying colors and going to become qualified chartered accountants. Once you get qualified, ensure that you give a value addition to your profession, you give a value addition to the company or client with whom you are engaged with. At the same time, take a social responsibility of giving enough value to your society at large. With these words, I end my discussion and end my presentation for today. And I thank all of you for your patience listening. I thank Board of Studies for giving this opportunity to take up these sessions. With this, I end my presentation. See you all the best for your examination.